Hey, welcome back everyone to the Black Brain Trust. This is episode 165. I'm here with my co-facilitator, Lionel. For those of you who want to follow along, there is a docket in the description beneath the chat, as well as an FYI. We are not certified financial planners. If you want a CFP, go to cfp.net and look up one in your area. We are not giving out financial advice at all in these hangouts. Please hit the like button and share as you feel free to.
All right. How's everyone doing today? How you doing today, Mike? My mic was mute. I forgot.
I'm all right yourself.
I am well.
All right. Let me bring up the first document. All right, first one is from entrepreneur.com. When to quit your job and go full time with your idea. The founders of 2App talk about how they kept afloat while developing their business idea. Oh, I'm sorry about that. This is actually a video. There was more text to it, but it's not readily available now for whatever reason. But it's actually a good summary to read if you're trying to start your own business and you're trying to get into the startup sector. Goes over the ins and outs and how to go about getting your first investments in your first class A investments in. So definitely something to pay attention to.
Yeah, it is something to pay attention to. Excuse me. Notoriously, being an entrepreneur and trying to get your business off the ground has been historically shrouded in mystery and has been notoriously difficult. People say you have to have X amount of money in reserves in order to at least have a chance of making it. And not only that, but also to not expect to turn a profit
Hmm.
in X amount of time. So being an entrepreneur is challenging, but at the same time, rewarding. Once you succeed, it's rewarding. And having more information on your side that will, as tools, using this information as tools that will give you a better chance to succeed is always a great deal.
Yeah, absolutely. All right. So the next article on the docket is from Bloomberg.com. Uber to seal $3.1 billion deal to buy Kareem this week. Sound like a brother from the hood, Kareem. Uber Technologies Incorporated is set to announce a $3.1 billion cash and share deal to acquire its Dubai-based rival Careem Networks (FZ) as early as next week, or as early as this week, according to the people with knowledge on the matter. The U.S. ride-hailing giant will pay $1.4 billion in cash and $1.7 billion in convertible notes for Careem, the people said, asking not to be asking not to identified, should say not to be identified, because the talks are private. The notes are convertible into Uber shares at a price equal to $55 per share, according to the term sheet seen by Bloomberg. Shareholders in Kareem, whose backers include Saudi Prince Alawi bin Talal's investment firms and Japanese e-commerce company Rakuten Incorporated, have been asked to agree to the terms of the transaction by Monday evening, and a deal could be announced as soon as Tuesday, the people said. Uber spokesman Matt Kalman declined to comment, while a spokesman for Kareem wasn't immediately able to comment. Uber's planned acquisition of Kareem comes ahead of imminent initial public offering, which could be one of New York's. New York Stock Exchange's biggest ever listings. Uber is expected to publicly file for an IPO in April, kicking off a listing that could value the company at as much as $120 billion. People familiar with the plans said previously. For Uber, a deal will signal its commitment to the Middle East, where one of its biggest investors, Saudi Arabia's sovereign wealth fund, is based. The acquisition would be a departure in its strategy for Uber, which in the past has used such deals to offload costly overseas operations in exchange for stakes in competitors. This is um this is interesting because Uber doesn't really turn profit like that. And you could probably say the same thing about Lyft, but the problem is when you're spending billions of dollars on these startups and there's no real tangible, uh, I guess, momentum on the ground with these startups. I just find that to be very, very fishy. If I'm a CEO, I don't know if I want to spend $3.1 billion to buy, some startup that really hasn't proven anything. At least from my perspective, because I haven't heard of Kareem before. What's your take on this, Lionel?
Now, from what I understand, from articles I read, Kareem, they do to they do ride sharing, but also they have other functions to their business, like providing internet.
Hmm.
And Uber's acquisition of Kareem is to, from what I read, is to shore up their, how am I trying to say this? Shore up their appeal as an IPO. So now you have a U.S. company that is, all intents and purposes, successful, and they just acquire another company in another region of the world in the Middle East, UAE, Saudi Arabia. So now I think they Pakistan and I missed another country. So now they have that under their belt. So when they do an IPO, it looks like they are more appealing, as if, okay, this is a company that is making acquisitions. They shown that they can get the job done in America. So even though they're not turning such a profit, that's a driving reason as to why they are having an IPO, so they can their C-suite can make a profit and to have more investors, so they can get more cash influx into the company. That is what I've been reading, and that's my take on it.
Hmm. And it's interesting that they focus on the Middle East, which is mostly a Muslim region. I know Saudi Arabia has a lot of draconian laws that prevent women from driving, and some of these other countries do too. So you factor in autonomous vehicles, and now you don't have to worry about women driving.
Hmm.
If you want to keep your draconian laws, you can keep your draconian laws. This is like a win-win for those places. So,
Yeah, that maybe social justice warriors in the future may say, well, Uber acquired a company that don't do this, such and such, but those are cultural laws. A company coming in are not going to change a country's cultural laws. So I don't know how much that will stick, but I'm sure some social justice warriors will try to swing at it.
all right, this next one is from CryptoBriefing.com. South Africa proudly leads the world in crypto adoption. A recent Hootsuite study revealed that South Africa ranks first in the world for the highest percentage of internet users who own cryptocurrencies. The social media management firm conducted the global survey in partnership with London-based We Are Social. According to the report, 10.7% of internet users in South Africa own cryptos. This was the highest ratio globally, with Thailand and Indonesia following suit at 9.7 and 9.3% respectively. South Africa ranked above some of the renowned crypto powerhouses, including Switzerland at 7%, South Korea at 6.3%, the US at 5.3%, Japan at 4.3%. The country's ratios was also twice the global average, which stood at 5.5%, the report further revealed. The survey results may come as a shock to many who thought cryptos were the preserve of developed nations. And yet, for those who have been involved in South African crypto market, this was just a confirmation of what they already knew. In a recent chat with Eugene Madano, Madando, I learned that South African crypto market has been expanding rapidly, even during the crypto winter. Madando is the digital marketing strategist at CoinDirect, a Cape Town, South African-based crypto exchange. CoinDirect is one of the more well-established exchanges in the country, offering both a mainstream crypto trading platform and a peer-to-peer trading solution. It also has operations in other African and European countries, with Kenya, Ghana, and Nigeria being the other main markets. According to its website, it offers its services in 132 countries globally, encompassing the six continents. Your what's your take on this, Lionel? As you talk about black people getting into cryptos and things of that nature, how do you see this playing out?
It's the future. It's the future as more and more countries come online in terms of being gaining more infrastructure and there are people coming out of poverty. Then you're going to see more and more people have a chance to invest in things, invest in traditional stocks, invest in cryptos. And as we talked about, a lot of African nations, such as Kenya, is into M-Pesa. A lot of African nations do transactions that don't have to deal with physical money because of recent histories and people not being able to have money, so they're doing these transactions in some type of other digital form. South Africa is an, just another country in Africa that does the same thing. Still a lot of black people in Africa, regardless of what you see on television. Now, you have Binance that opened up a branch in Uganda. Now you have Kenya, Uganda, and that corridor. Now you have South Africa, which is one of the leading financial powerhouses in Africa, that which leads the world in the percentage of the country that has crypto. You mentioned before how African people are outpacing black people in the Western Hemisphere, and this is another piece. Well, this is just another proof of that. They're they are in prime position to gain a lot of financial what's what I'm looking for, financial independence, because they are investing in cryptos. And I'm of the belief when this space exploration kicks off within the next decade or decade and a half, whatever the case may be, a lot of these mining operations and is going to bring in a lot of money to Earth. So that type of money is going to have to be digitized because it's not enough printed paper worldwide, all countries combined, to hold that type of wealth. You know, we're illiquid. You know, we're highly illiquid to hold these type of minerals. So a lot of money is going to go digital. They're in prime position. They don't. I don't know if they know it, but hey, kudos to South Africa.
Yeah, I find it interesting that the depiction of Africa, and Africans is that, oh, they live in mud huts, they're just so poor, they don't have this and that. And the reality is they're moving at a faster pace. They're adopting cryptos. Doesn't say which cryptos they're adopting, but they're getting into the market. There's 100 cryptos that you can buy into, especially the most prominent ones being Bitcoin, Ether, Litecoin,
Hmm.
XRP. Um,
EOS, Cardano, Tron. The
Yeah,
top, the
top
the
10,
top one. Right, right,
top 10. So they see the necessity for it. Um, and usually because their nation state currency is either inflated or it doesn't really have any value. When you have cryptocurrencies to offset that, man, it's like, why not? What am I going to lose as an African going into this? How much can I lose going into this? Um, when you're in America, you kind of look at things differently because your priorities may be different. Your perspective is not always as progressive because you're looking at um, you're looking at the value of the U.S. dollar and you're using that to say, well, I can spend this at the corner store. Why do I need a crypto? But the crypto isn't about the ability to spend money. It's about a digital asset, and you got to understand that a lot of these companies in the Western Hemisphere are not paying pensions anymore.
right, right.
You're not getting that 401k. You work at Walmart, you're not getting a 401k. You got to start thinking about retirement. You got to start thinking about that, thinking from a perspective that Social Security is not going to be there when I go to cash out at 59 or 60 years old. Some people are still working past 60 years old. So there's a different mindset that's taking place um, on the continent versus what's happening in the West.
And the age of retirement is going to go up. So now you have people there that are not in the U.S. investing in these cryptos that can put them on an even playing field with American investors of cryptos. Because when these cryptos increase in value, it doesn't differentiate, oh, you from South Africa, so you get this percentage. No, every boat floats. So now you have this influx of capital, and they're going to cash out because now it's like the value is in American dollars. The percentage of increase is like in American dollars. So you're
Hmm.
playing on the same playing field as America. Now you can invest in your country. So this really have the opportunity to have a lot of black people invest in Africa. A lot of native Africans invest in Africa.
Hmm.
Wow.
All right, next one is from cryptobriefing.com again. Dash Nigeria. Bitcoin dominance challenged by unstoppable adoption. In Nigeria and neighboring countries, Dash is going around on the number one digital asset. Bitcoin is the undisputed global crypto king. Its dominance on exchanges stands at just over 50%, and it's the standard by which all other cryptocurrencies are measured. However, in Nigeria, a dedicated group is carefully scripting a different narrative. Dash Nigeria is a nonprofit educational and promotional organization that pushes for the adoption of Dash in Nigeria and beyond. Its vision is to enhance the Western African countries' economic growth through the use of Dash. The organization engage with youth, the women, rural communities, media, and other stakeholders to help explore the opportunities that digital currencies present. For Dash Nigeria, it's not about the digital currency hitting all-time highs again. It's about holding the currency and waiting for the next bull run. Instead, it's about solving the challenges that the continent faces. In a recent chat with organization's business development lead, I got to learn about the tireless efforts the group has been putting into seeing Dash get a wider user base in Africa, and the results have been encouraging. Nathaniel Luz told me, why Dash in Nigeria and not Bitcoin? Bitcoin should have been the most logical crypto to push in Nigeria, given its popularity over all the other cryptos. But according to Luz, the exhaustive list of advantages that Dash has over Bitcoin and the other cryptos as well make it a logical choice. Firstly, Dash transactions only take a few seconds at most, compared to Bitcoin, which averages 10 minutes. It therefore makes more sense to push for retail adoption of Dash, especially for day-to-day transactions. Dash transactions also cost a few cents and have been consistently cheap throughout. The further the further makes or this further makes it for ideal for retail transactions. There are over 100 stores that currently accept Dash in Nigeria, which most of these stores are located in the cities of Lagos. Other cities are coming up too, including I believe that's Life and the capital of Abjua. Abjua. So, Lionel, what's your take on Nigeria getting involved? I mean, we just read about South Africa being the number one crypto hub. So,
Hey, it's all good. Now, Dash is in Venezuela also. The one of the things I don't that he mentioned how a white Dash took off in Africa and not Bitcoin. Well, Bitcoin doesn't have a leader. There's no person, you have this person or a group that's called Satoshi Nakamoto, but there's no one clear person to say, hey, this is the CEO or these are the leaders of Bitcoin. Bitcoin is anonymous. So with Dash, Dash made a concerted effort to have ambassadors in Venezuela, Mexico, Nigeria. They had a concerted effort to put people there to preach the gospel of Dash. That's what they did. And I mean, I've been in Dash Discord, and this is what they talk about. So now you got Dash, which has a Masternode component, and this Masternode is expensive. It costs a couple, a few $1,000s. But when the bull, they talk about the bull run come. You hold a couple Dash in your wallet, the bull come back in crypto, and all of a sudden, your net worth goes up exponentially. And these coins are divisible at least by 8. And when they get to a certain point, there can be divisible some more. So to give an example, Bitcoin is divisible by 8. So in the future, people believe um, Satoshis are going to be Satoshis are short for Satoshi Nakamoto. So when it's divisible by not zero dot whatever, those are then called Satoshis. So people believe in the future that Satoshis are going to be on the same level as dollars. And Dash is a top, I'm say 20 coin. So now Dash is in these countries. They're making a concerted effort. They have ambassadors preaching the word of Dash. They have people adopting it in different ways as a payment solution because it's faster, because you have more people confirming these on the Dash network, confirming the transactions quicker. So they're getting a head start on adoption compared to Bitcoin. So now Dash is divisible. So now you may have one whole Dash, and Dash goes up. It's all time high. Previous all time high was, I want to say 1,500.
mhm,
Dash goes up to, let's say, pick a number, 3,000. Now you bought Dash share, I believe it was at $90. Now you got $3,000. Now you can break that Dash up into $5 here, $10 there, $50 here, $100 here. Then one coin that you bought for $80, now you have a net worth. So that's the me in my opinion, that's the biggest reason Dash has been able to grab a foothold in these other countries because they made a concerted effort to have ambassadors. When you go to their Discord, they have these different type of ambassadors, and other cryptocurrencies are doing it. So it's good. These people are not sitting on their hands. They are pushing adoption of these cryptocurrencies. And when the bull comes back and these prices go up, people are going to be more familiar with these names.
mhm. Ronnie Holmes in the chat asked a question: do any of you foresee cryptocurrency becoming the world reserve currency at some point? Me personally, I don't see that becoming a world reserve currency, but I do see it being a digital asset that is attainable in the same way as gold was at some point. before gold hit 1,000, right? I think it's at 1,200 now. Um, it's basically just another security at this point,
Mhm.
because it's redeemable in multiple places now, as we just read from the article for Dash. Um, Dash being in Nigeria, and also South Africa being a crypto global hub now. So,
And I
Platinum,
agree.
you want to touch on that?
Yeah, Dash. Yeah, these cryptocurrencies are not going to take over what is established right now. I know a lot of people on YouTube, when you look at these crypto videos, they say, "Oh, moon, win this next week. Bitcoin will be $1 million," and they give you these fluff. It's almost like church. When you go to church, you get this good feeling, but when you look at the market again, it's the same thing. Look at it in reality. They're not going. These things were created January 3rd, 2009. Bitcoin was. So they barely 10 years old. And now you're talking to these things that are going to take over the world. That's irrational thinking. That's um that's not reality. Now what we can say now, these cryptocurrencies are going to be another form of payment. That's what I think in my humble opinion. They're going to be another form of payment for people to have to people can have control of in the future. That's what I think.
Hmm. Dollar, what's going on, brother? You have anything you want to add?
What's going on, Dollar? How you doing?
I think he might be having mic issues.
But I'm glad to see Africans, especially continental Africans, are investing in these cryptos. I'm glad to see that, and and since Africa's population is very young, and we know that most of the people in the world, especially in America, that are investing in cryptos are millennials, and most of Africa's population are millennials, which means there's gonna be a high influx of middle income, middle class, or upper class people in Africa in the future.
Yeah, absolutely. That
Yeah,
if they're really trying to build a Wakanda, they're on the right path.
right. And you have and you have Akon doing the crypto thing
Senegal,
in Senegal. Yeah, right, Senegal.
Hello, everybody. Can you hear me?
we can hear you now, bro.
Yeah, what's going on, Dollar? How you doing?
Oh, good. Sorry about that.
All right, this next one is from CryptoBriefing.com. Holo Chain USD technical analysis. Bulls hard at work. Holo has a bullish short-term outlook, with the cryptocurrency attempting to build strength back by above its 50-period moving average on four-hour time frame. Bulls need to work hard in order to negate the bearish head and shoulders pattern that is currently looming over the HOT USD pair on the 4-hour time frame. Technical indicators on the 4-hour time frame are currently generating a strong buy signal. Trade pattern watch. Traders should note that the bearish head and shoulders pattern has a downside projection that would take the HOT USD pair back towards the worst selling levels of 2019. The relative strength index is currently generating a strong bullish signal on the 4-hour time frame. The MACD indicator has turned bullish on 4-hour time frame, with both MACD histogram and signal line turning higher. Holo has a bullish medium-term outlook, with the HOT USD pair once again attempting to build momentum above its 50-day moving average. An inverted head and shoulders pattern is still visible on the daily time frame, with the latest decline in HOT USD helping to carve out a right hand shoulder. Technical indicators on the daily time frame are neutral and have yet to turn bullish. So this is a crypto that I have watched for probably about 6 months now, and I can't really see the value overall other than the cloud blockchain computing portion of it. It's a good platform, I think, but I don't see it being meaningful outside of cloud computing. What's your take on it, Lino?
Well, since its use is cloud computing, um, I think that they should just stick to that and master that first. Cloud computing. If, like you said, if well, like you said, that's where their strong suit at. That's where they debut Hollow Chain at. That's where their bread and butter is going to be at. And we know cloud computing has jumped off, and now
Hmm.
we have blockchain as a even better layer to that. And they're trying to combine these two to make something that is very attractable to businesses and companies. And they do that well, and they show they have a product, and they show a working product, a working viable product at that. And now you see that they're doing what they say that they were doing, and they, well, I'm trying to say, they some quote unquote perfect that. Then that's their product in terms of the technical analysis of what they're saying. I want to say stay in line, do what you do. So that's my opinion on it.
All right, what's up, family? Mike, can you scroll? Yeah, there you go. You got it sitting right now. Well, let me see. Bring up that chart that they had in the article,
Okay.
and see why you bringing that up. My comments about Dash, or not Dash, but whether the dollar is going to be removed as the base currency. At the end of the show, close to the open mic section, we're going to look at the dollar because it's on the chart. We're going to look at a longer range perspective. I don't think that the dollar. I think the dollar is going to remain the reserve currency. It's just, hey, my opinion is about as good as anybody else's on this. But once I can show it on a chart, you can see how people are having an emotional response to something that rarely happens in terms of all of the world currencies are suffering to the strength of the dollar. So it's like a selfish kid, when it's your turn to go out in the field, and pitch to the other team. Suddenly, you don't want to play no more. It can't always be roses for you. The general trend of the dollar is to go down, and the euro and these other currencies and the Swiss franc, they normally go up. But since 2011, they've been suffering. So now you see all of this, panic. But we're closer to the end than we are to the beginning. So and they know how to read charts too. So and my view of cryptocurrencies is when the dollar resumes its typical trend. I'm judging from say 1970, and I'm gonna show y'all later. We're gonna look at it on the chart. The typical normal trend for the dollar is to go down, and value moves from the dollar to materials. That's why people think that it's always a good idea to buy a house, because your value moves from the currency to the materials. But I'll get into that later. But this, what we're looking at here with Holo, I tried to bring it up on bar chart and I couldn't do it. But when they talk about a reverse head and shoulders, look at the second highest peak. So we're reading from our left, looking at this chart, the second highest peak. That would be considered that would be just before February on this chart. That would be the left shoulder. The highest peak, that's around the 18th of February. That would be the head. And so when a price doesn't clear that left shoulder, or come up in that area, when a price runs out of steam, basically, and it doesn't clear either of those two, generally that's considered a head and shoulders pattern. So if the prior trend was bullish, that's a head and shoulders. So the second to the highest peak would be the left shoulder, the highest peak would be the head, and the highest point where we are now around March 18th, that would be the right shoulder. And that red line they have is considered the neckline, and technicians are looking to see if the price is going to go lower and drop below that red horizontal line. That's the danger point. Now, think of it this way: if you see in a publication, definition of head and shoulder patterns, every technical trader knows this. Computer automated trading systems have it programmed looking for this. So when the price goes below that red line, those computers are programmed to sell. So that this is why it helps to know technical analysis. If you're holding something and you see one of these technical formations like head and shoulders, which that a lot of computers around the world are programmed to sell when the price falls below that horizontal line, then you get to make a decision. You could always sell, see what, if you agree that it's going to fall, you could sell and get back in later at a lower price. But that's now reverse head and shoulders is what happens when the prior trend was a downtrend. And so the second lowest to the low would be one shoulder. The lowest peak would be the head, and the peak on the near the present tense. I'm sorry, the 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 next to the lowest low near the current price would be the other shoulder. And so that would be, they called it reverse head and shoulders. They're saying imagine someone upside down standing on their head. That's why they call it reverse head and shoulders. That's
Interesting.
I just wanted to explain that. But just understand that the way these cryptocurrencies are quoted, they are quoted relative, their value is quoted relative to the US dollar. So I'm a dollar trader, and my opinion is that the dollar has this recent term, the dollar has found the bottom, and we'll talk about that later at the end of the show. And the dollar is going to rise from here. That's why on the news you're hearing now everybody's starting to see that gold is breaking down. Oil is struggling now. It's because of what I've been saying, that dollar was going to stop this fall. So now so when as the dollar rises in strength, it's going to be a dead weight against cryptocurrencies that are quoted relative to the dollar. So any crypto you see is quoted like Bitcoin / dollar. So what you're seeing in that chart is the value of that crypto compared to the dollar. So if the dollar is rising, that's going to be negative for that other cryptocurrency. If the dollar is falling, that could be a positive. That theoretically is a positive for that thing that's measured against it. So that's all.
All right, thank you for that. Um, we'll get to the next article now. I think this might be right up Will's alley. All right, next one's from arstechnica.com. Apple debuts its own credit card with a physical version to complement the app. At Apple's event on Monday, the company announced that it would partner with Goldman Sachs and MasterCard to offer its own credit card, not only within Apple Wallet app, but also as a physical metal credit card that can be used wherever Apple Pay isn't accepted. The Apple Card will come without any late fees, annual fees, or over limit fees, or international fees. The company promised a low interest rate, but that rate does not seem to have been made public yet. Instead of offering points, Apple's card will apply cash to the customer's card. Customers receive 2% cash back on purchases made with Apple Pay and 3% cash back on purchases made on Apple products. On Pure Economics, Ted Rossman, industry analyst at creditcards.com, said that Apple's cash back terms were okay but not great. Rossman pointed to Citi's double cash card, which offers 2% cash back on every purchase, or U.S. Bank's Altitude Reserve Visa Infinity Card, or Infinite Card, which gives 3 points per dollar on mobile wallet spending, worth 3% cash back or 4.5% off travel. Quote, I definitely see why Apple is doing this. They want to juice Apple Pay usage, Rossman wrote. Plus, as a merchant, they'll save on interchange fees when Apple Card users buy something from Apple, and as a service provider, they'll get a cut of Apple Card transactions elsewhere. Besides the financial considerations of Apple Card, the company is clearly trying to draw users in on customer-friendly accounting and repayment plans. The company showed off its app in front of its Cupertino, California audience, stressing that it wanted to make repayment easier and more intuitive for users. The app shows total balance and weekly spending you open it up. And a repayment plan allows customers to adjust their payment repayment period to see how much interest they would pay if they pay their credit back more quickly. So Apple wants to be a intermediary here in terms of the financial system. I mean, somebody has to pay for those battery swaps and those logic boards, right, Dollar?
Yeah. I'm still not getting why. I'm an Apple fan, but I haven't heard anything about this car where I just got to have one.
Really?
No, not really. No, I'm not. I'm not getting it.
I
Oh, I
would
mean, go
go
ahead,
ahead.
Lionel.
I would say revenue because Apple needs revenue. Say,
No, I mean why I
oh,
should be
I,
getting the
What's the
car.
enticing factor?
Yeah.
yeah. Now, just to be clear, I have an iPhone. If I choose, if I choose to stay with Apple, I'm not gonna get it either. I do like the presentation of how easy it is to view your charges and so forth on your phone. That presentation is seems looks easy and easy to understand to me, but still, with all that, I don't need it.
Now tell me this: do you use Apple Pay?
No.
That my answer. That's it. I don't use it either.
The problem is that Apple Pay is not accepted everywhere, right? So your local bodega does not have Apple Pay for the most part. I know some places are starting to do it, like Stop and Shop and um, uh, CVS and those places. I know they're starting to do it, but it it's one of those things where you have to ask yourself. Most Americans are going back to cash now. This is a time
Uh,
when people are being fiscally conservative, so they're not looking to even whip out any sort of cards. They're either cutting their cards or um, they're being really fiscally conservative where they're only spending what they need and they don't want to actually get involved in any more um, financial payment systems and that are modernized. They just rather go back to cash. I see that happening right now. Especially when you go to the post office, something that's uh, a very common place for most people to actually frequent in their outgoings. Um, there's no Apple Pay there. From my last time I checked, you, who makes up this price for stamps, right? You got to pay 51 cents for a stamp. Who carries a penny around with them, right? I mean, the point that
you
I'm
got a
making here
point
is
there.
that the point that I'm making here is that the places that people frequent or most frequently are not really Apple Pay stations, so there's really no reason to actually use it. And when you want to buy stuff online, you don't really need Apple Pay, if that makes any
Right. And,
sense.
and and I'm okay right now. I don't have much in the way of complaints for my credit card and debit card right now.
Mhm.
So I don't.
It, it seems like okay, Apple knows that X amount of percentage of their sales comes from the iPhone. So I'm trying to think to say, well, I'm I'm the CEO of Apple. 60 at least 60% of our revenue comes from iPhones. So we know people hold iPhones. Not only do they hold them, they hold them longer. So let's introduce something. We're going into the services industry with this new introduction of Apple Plus. So let us do a credit service, add more revenue on top of our mainstream revenue. And even though that Apple Pay is not accepted everywhere, I and even though people are being frugal now because of the market cycle, maybe Apple is setting themselves up in the future. And if they're doing it, they are going to have to partner with other um, establishments to accept Apple Pay. Because if they partner with Oprah, then I'm sure they can go out there and partner with other establishments for Apple Pay. That's how I'm looking at it. They know the iPhones their bread and butter. This is their revenue, so they're trying to get other revenue on top of that revenue.
I think Apple is feeling the brunt of the mistake they made when they made iTunes and the App Store. Well, App Store makes sense to be closed, but when iTunes was closed, and then they came out with Apple TV, and that was a closed platform, then it seemed like they kind of abandoned it. But if they had stayed with Apple TV and had stopped being so proprietary on how the iTunes treat products that's not Apple products, it would have been easier in that environment to slip a credit card in there or slip Apple Pay in there or offer some additional benefit if you use the Apple credit card or Apple Pay to do transactions in their universe. That would have made a whole lot of sense. But they're trying to catch up now, and people are quite comfortable using. I don't even know if they're going to catch up with shoot the Walmart debit, a gift card or whatever, and Cash Me and PayPal and debit and credit. I don't see why. Yeah, they got an uphill battle.
Now they can partner with Target because it seems like the people that use iPhone will go to Target. I will go to Target before I go to Walmart. They can maybe do that.
Well, they have their own Apple stores, so you have to keep that in mind that, that will be the number one place that people need to go buy those same chargers that keep dying every few months
Hmm.
and fraying and whatnot. But to that point, the only way you're gonna have mass adoption of a Apple system like that is if they partner with the government on on EBT cards and things of that nature. We can replace the EBT card with a more secure platform like the Apple iPhone with its biometric encryption, biometric authentication, and their Apple Pay network.
Yep. Or partner up with something like McDonald's, some fast food,
They have to partner with somebody.
right, right. Because they don't have, nope. I mean, when the iTunes came out, they were fresh and new, and they kind of had a niche, and they had an advantage. And when they came out with Apple TV, they had an advantage. What did they do with the advantages they had? Nothing. They just blew it.
Mm.
So no, I don't. The Apple's gonna have to come a little more correct to make me want to have their credit card. They have to make a argument why I need it. What are they? What is it?
Hmm.
I understand there's some the points and all of that, but it's they have to make it seem they have to present it
Irresistible.
in a way, yeah, where they have to create FOMO. Okay,
Hmm.
they have to create FOMO to make me want to go get it. Fear of missing out.
All right, this next one is from RT.com. Indian rupee goes from worst to best performing currency in Asia. It took just 5 weeks for India's national currency to flip from worst to best performing currency in Asia. The rupee soared past its emerging market peers, bolstered by a weakened U.S. dollar and surge in foreign stock inflows. Since the start of since the start of February, the rupee has gone from levels above 71 against the dollar to about 69.1 on Wednesday, the strongest since last August. It was trading at 68.57 against the greenback on Friday. Experts say optimism about Prime Minister Narendra Modi's chances of securing a second term in the country's upcoming elections and the recent eruption in tension between India and Pakistan are two prime reasons behind the rupee's appreciation. A weaker US dollar and the positive domestic equity market have also fueled the rupee's rally, forex dealers add. The high yielding rupee will likely advance further if Modi wins a second term. A currency Gal Ki, a currency strategist at uh, Scotia Bank in Singapore, told Bloomberg. The expert, who expects the currency to rally to 67 per dollar by the end of June, said a dovish tilt by major central banks in the face of a faltering global expansion could also prompt foreigners to chase higher yields in emerging Asia. Statistics show that foreigners bought a net $3.3 billion in Indian shares through March 18th, accounting for more than half of $5.6 billion of inflows year to date, and base holdings of bonds by $1.4 billion this month. That sent the rupee to the highest level since August. So a weakened dollar, um, dollar will. What say you?
You will when I get to the dollar part. It depends on what part in time we're talking about. The dollar has been oscillating higher since 2011. So in one of those down oscillators, that's when this currency was stronger.
Hmm.
So that's what they're talking about. So you kind of have that's the problem with the way that the news when they talk about this stuff, they don't show charts to show things in context. You
Hmm.
know, it's like the 2011 was what are we talking? That's 8 years ago,
Hmm.
and within that 8 years, the dollar has trended down for I believe it's had a period where it might have trended down for a year within that period. So you can hear a story talking about the weak dollar, but they don't say that on going back to 2011, the trend higher is still intact.
Hmm.
You know that the dollar can make up so much ground, say in a 3 month period, going higher. Then it can turn around and trend lower for a year and never make a lower low. So the news will tell you that it's weaker, but your mind will assume that it's lower than the previous low. No, it's not. So that's why it helps in no technical analysis. You look at it, you go, okay, well, did it make a lower low? No. Then it doesn't matter how long it's been trending down until it breaks that structure of higher lows. Then the uptrend is still intact.
Hey, we got 24 people watching. Please hit the like button. We only got 13 likes. So, if you're gonna watch and not say anything, at least hit the like button.
Yeah.
Ronnie Holmes in the chat asks a question. In a post-American dominated world order, where would India rank as a contender for world dominance? India has a very strong, intellectual human capital base at their disposal right now. They have, I think by the end of the year, they're supposed to have at least 1.3 and a half billion people in their country, which is more than China. So, and they're ramping up really fast in terms of space development. They're talking about putting a lander on the moon by the end of the year. Um, their IT, they are impeccable when it comes to information technology. They are very dominant in those areas, and they have nuclear weapons. And they house most of the technological corporations in their country as well. They have a mass poverty issue, but they still seem to have a lot of um, headroom for growth. So they're also invested in Africa, very heavy, especially most of the British, former British colonies, South Africa and Kenya and Nigeria. So th- they are um, they are on pace in the next maybe 20 years to really be a dominant force, especially they're going to go up against China. I don't. You have to understand it's not going to be a unipolar world. It's going to be a multipolar world. You're going to have China. You're going to have South Korea. You're going to have Russia at the helm. You're going to have many of your emerging sub-Saharan African countries emerging out of poverty into second and first world powers. Um, and same thing in Latin America. You're going to see Brazil, break out. You're going to see Colombia break out as well. Um, it's one of those things. It's just a multipolar world where we are right now. So there is not going to be one single world dominant player. It's going to be a multipolar world. And United States and people in the West are going to have to get used to it, especially people with blue eyes and pale skin. DE, what's going on, brother?
Good evening, everybody. I'm okay.
All right. All right, let me get to this next one. We're way ahead of schedule. All right, this one is from investing.com. Saudis look to pass comebacks in making bold bets on oil. Deep within its unprecedented cooperation with Russia on oil production cuts is Saudi Arabia's conviction that in order to get the price per barrel it wants, it can afford to put its own market share at peril. An ability to come back from the brink twice in his battle with the U.S. shale, the first between 2017 and the middle of last year, and again since the beginning of this year, with Russia on its side both times, has given Riyadh the confidence that it can eventually make $80 or more from a barrel of oil. It's grammatical error there. Political history is on the Saudi side too. From literally getting away with murder, the slaying of the journalist Jamal Khashoggi has hurt the reputation of the Crown Prince Mohammed bin Salman more than the fortunes of the kingdom. To the relatively small price it has paid thus far for its role in the Yemen war. Saudi Arabia has been emboldened into believing it can push the reset button on just about anything. That explains the kingdom's current gamble on oil, one of the most audacious in its 6 decades of managing the oil production club OPEC. Despite U.S. crude production having taper off its highs over the past month, the the implied threat to the Saudi market share is all there. Headlines gush about U.S. crude exports hitting around 3.6 million barrels per day, and a major Asian customers like India Oil buying from the U.S., while Saudi production is expected to fall about 30% below norm next month to under 7 million barrels per day. Yet Energy Minister Khalid Al-Falih in his speeches harps only about the need for market rebalancing, which is Saudi speak for higher oil prices. So I don't have I talked about this in the emails chain that we had this week with a certain member of the Black Brain Trust who's talking about Venezuela. Americans had a sort of a bull run about 8 years ago when it came to oil shale production or fracking. And what that did was it threatened Saudi Arabia's oil production because they were selling oil for cheap. It didn't cost a whole lot of money to get into fracking. All you needed was like $100,000 or $200,000. You can get into oil production really quickly. Um, People were fracking all over the country, um, and that sort of oil becomes if you struck good and you in terms of shale, you had access to oil for dirt cheap. The Saudis understood this and wanted to counter it by crashing the market. And that's what spun oil down from $115 a barrel down to $25 a barrel overnight. That was very it, the Saudis were actually very instrumental behind this, which was to keep shale oil from in making any profits. And which is why Venezuela has its problems as well as Russia. Russia has its problems as well in terms of oil production because they're not making the same money that they were before. And the Saudis were willing to take a pinch based on this. I talked about this in the email, but this is the crux of what's going on. But they're hoping to get back up to $80 per barrel, but I doubt that they're going to get up to $80 per barrel because the United States is really pushing a lot of oil out now. If I remember correctly, they're pushing out at least 13 million barrels of oil per day, or they're producing 13 million barrels of oil per day, but they're pushing out at least 3 million.
Yeah, I would say that yes, that is the fundamental argument.
Fundamental is fundamental is all I can really offer based
No,
on
no, no,
based on
no.
the
That,
data.
I'm not saying that it's invalid. I'm saying
Mhm.
that's there's this different ways of looking the technical and the fundamental way, and that just never that argument's never going to end. So it's just try to understand both. That's what I'm trying to say to people. Try to understand both. That just the main thing to take away is oil and currency or the dollar have an inverse relationship.
Mhm.
When oil is trending higher. By trending higher, that does not mean it goes straight up. It snakes its way up in that in like a coil, and there are down periods. But the overall trend, when you zoom out in a longer span of time, it's going higher. And in that uptrend, there's a race to hoard uh, this rising commodity, right? This commodity is rising in value. So enter the fracking, like you were talking about. Um, Basically, you're trying to hoard as much today because tomorrow it's going to cost more
Mhm.
to extract it later, but it's all going to be worth more later. So it's cheaper to get it out now. That's the mindset when you're in the business of trying to control a rising commodity. But when that thing flips course, now you get punished because you created this big excess that you're storing that you thought you could sell later at a higher price, but you can't. So now you're causing the thing to go down. And just for the record, oil has been trending down since like 2008 or something like that.
Yes.
Yeah. So but on the news, they'll have you think that it's just been rising. So since about 2008, uptrends and up moves in oil have been the exception and not the rule. Down has been the rule since 2008, but we've had several year periods where it has gone high, where it has been rising, but it has not taken out a previous high. That's why you have to throw in technical analysis to put these news stories you hear in perspective, because they rarely put it in perspective, because the nature of news, they want you to think that every bit of information that they're telling you today is crucial, and it's not. In perspective, viewed in perspective, it's not.
Mhm.
Yeah, the only
And I'll show this on the chart. If at any point if you want to interrupt me and want me to throw it up, fine. But otherwise, I can just wait to the later section where I don't want to slow the show down with it.
Yeah,
But
the
keep
only
but keep that in mind and remind me to bring up the oil to show what I'm saying.
okay. Yeah, the only view I can offer is fundamental. Also, I read the articles Mike sent out, and it I have to agree. Saudi Arabia's it one of the articles says Saudi Arabia thought that Shell was America's attempt to do some type of coup or something. I can't remember the specific word.
Disrupt the Saudis out of power,
Right.
or being the leading oil producer.
Then they found out what was really going on, so they said, "Well, we can't do that because we can't let that happen because that will disrupt our moneymaker, our cash cow, and the Arab nation cash cow." So they purposely tanked the market in order to make it pricier for these companies around the world to uh, drill and refine their oil processes.
Mhm. All right, let me get to this next one. The Fed's controlled. This one's from ZeroHedge.com. BGS actually sent this in. Shout outs to BGS. The Fed's controlled demolition of the economy is almost complete. The Federal Reserve is an often misunderstood entity, not only in the mainstream but also in the alternative economic circles. There is this ever pervasive fantasy on both sides of the divide that central bank actually cares about forever protecting the US economy, or at least propping up the US economy in an endless game of kick the can. While this might be true at times, it is not true all the time. Things change, agendas change, and sometimes the Fed's goal is not to maintain the economy but to destroy it. The delusion that the Fed is seeking to kick the can is highly present today after the latest Fed meeting in which the central bank indicated there would be a pause in interest rate hikes in 2019. As I have noted in numerous articles over the past year, the mainstream media has the mainstream media and the Fed have made interest rates the focus of every economic discussion, and I believe this was quite deliberate. In the meantime, the Fed balance sheet and its strange relationship to the stock market bubble is mostly ignored. The
Remember
word
that line as Mike reads.
the word capitulation is getting thrown around quite hazardly in reference to the Fed's tightening policy. And yet, even now, after all the pundits have declared the Fed in retreat and trapped in a cash 22, the Fed continues to tighten and is set to cut balance sheet assets straight through until the end of September. Perhaps by perhaps my definition of capitulation is different from some people's. One would think that if the Fed was in retreat in terms of tightening, that they would actually stop tightening. This has not happened. Also, one might also expect that if the Fed is going to fall, going full dovish, that they would have cut interest rates in March instead of holding them steady at their neutral rate of inflation. This had not happened either. In fact, I'm not exactly sure how anyone can claim with a straight face that the Fed has given up on quantitative tightening (QT), despite the many assumptions out there that the Fed's going to reverse on interest rates. I believe this is wishful thinking and that the Fed will not reverse rates in 2019. What I do see is the Fed using rhetoric and fake and head fakes to give the impression that they plan to go dovish in the future. And this is being wrongly interpreted as Fed being dovish now. But why is the Fed doing this while also continuing to dump his balance sheet? In my view, it is because they are almost finished with the task that they set out to accomplish with quantitative tightening in the first place, and they now have to make it appear as though they want to accommodate as the system breaks down. So, Dollar, what's your take on this?
Okay. Let me put this advisor out.
Hmm.
I'm the technical purist. I'm way left. I do not believe that the Fed controls anything. I think the Fed is reacting more than controlling. This is not the time for interest rate cuts. I think the Fed is made the right decision to go neutral. You will see interest rates rise before they get cut again, because the dollar has been falling for a good little stretch. Let's see how long this thing has been falling since. Let's see, Okay, it fell from like December of 2016 until like about a year ago, January, and it's just been kind of rising at a kind of lazy rate since for the last January of 2018. Um, when, not if, when we take out the high since 2011 was in was it December of was it 2015, 2016? Or when I get to the charts, we'll show that. But that's the high of the in the dollar since 2011. I'm of the opinion that we're going to take that out. It's not going to be long. We're going to take that out. We could see it. We could take that out by summer. Okay. So then now technically we'll be sitting at a high in the dollar for an 8-year high in the dollar. That's the time to raise interest rates. So I'm of the camp that you're likely to see interest rates rise. In fact, I believe we're going to see interest rates rise, okay? Because when the demand for the dollar creates the opportunity to make money. Now, how is it that the world is going to demand dollars as the dollar is rising, and America is not going to capitalize on that? That makes no sense. Does not make economic sense. You have something that's in demand and you're not going to profit from it. You profit from it by charging a premium. That's the interest. You cut the interest rate to encourage people to buy something that they don't really want. That's what you do when the dollar is falling. But we're not in a declining dollar state, but people are in the mindset that the dollar is declining since 2011. But when the chart validates that the dollar is rising and then we're in like an 8 or 9 year high, people have no choice but to change their mindset and accept that the dollar is going higher. And I'm going to show it later at the end of this section. I'm show you on the charts. I'm going to do my Elliott wave count, which you've never seen them do on television. I'm going to go back from 1971. And I'm going to show you where we are in the wave count and why the dollar is going higher. But we'll see.
Yeah, there was a certain paragraph that you said to keep in mind. It says, in the meantime, the Fed balance sheet and strange relationship to the stock market bubble is mostly ignored. Why just what
Because
stuck out to you?
what stuck out to me is that the author is tipping his hand that people need to look at, noticing that there's a relationship between the stock market. He really could have put in there the state of the US dollar. That to me, I hear that as him resonating with my view that the Fed is not making this decision in a vacuum. They're looking at the value of assets, and they're looking at the state of the U.S. dollar. They know how to read charts better than everybody. Okay, they
Hmm.
know too. It will. That's what I love about YouTube. I get to come on YouTube and say statements that sound idiotic, and I'm very aware that I'm being recorded. I'm very aware that what I'm saying, you'll be able to look at it later and see, um, you know, if what I'm saying makes sense. The only thing I ask is that you be diligent in taking notes about what the people on TV say. The people who have so much sway in our minds about how things work. Just write down what they say and when they said it, because we don't do a good job making these people, answer for some of the things that they feed to us. So if you get into the practice of saving these articles of who said what, it will transform the way you think about things and who it'll help you choose your sources better in the media.
Hey, DE, you have anything you want to add to this?
Nah, not really.
Okay, get to the next article.
Yeah, but I think they were smart. I think the decision for them, the Fed, to just pause until, I think they need to see something definitive in that dollar, you know. But that's just, but there's my argument that at least on a, without, I'm not an economist. Paul, we need Paul on here, somebody he's on the fundamental side of um, of the economic realm. I'm just a trader. But does my argument have a common sense ring to it in terms
Absolutely.
of, if the dollar is rising, that's the time when you can charge extra for it and have the market support it?
Yeah, absolutely.
But if it's falling, it doesn't make much sense to charge interest when people don't want it anyway. If they wanted the thing, it would be rising in value, but it's dropping in value because the market is rejecting it. So how can you raise the interest on something that nobody wants?
That sounds common sense to me.
Exactly.
All right, let's get to this next one. This next one is from CoinTelegraph.com. Japan Yahoo backed cryptocurrency exchange set for May launch. Tato, which is 40% owned by a subsidiary of Yahoo Japan, will initially trade Bitcoin and Ethereum with margin positions available in three additional cryptocurrencies: Litecoin, Bitcoin Cash, and Ripple. Prospective users can already sign up for an account and participate in promotional giveaway scheme. The plan originally came to light in March 2018 when Yahoo Japan announced it would acquire a major stake in exchange through its subsidiary YJFX. At the time, sources suggested the purchase had cost the company around 2 billion yen, then $19 million. The move marks the internet giant's first foray into the cryptocurrency exchange world, with Tato having gained regulatory approval to launch on the Japanese market. As Cointelegraph reported, Japan has sought to impose strict monitoring on entities wishing to launch exchanges after several infamous hacks placed an international spotlight on the industry. Um, what does this mean, Lionel? You sent this one in.
Well, in my opinion, this shows that it's a slow adoption of cryptocurrency. As I said before, well, I didn't really say it before. I'll say it now. When the calendar turns another day, it's not going to be a scenario where boom, cryptocurrency is in, Bitcoin overtake the dollar, Bitcoin is the world reserve currency, yada yada yada. It's not. It's going to be a slow march to adoption, slow march to find its place in the asset market. It's going to be a slow march, and this is that. You see the breadcrumbs along the trail. It may not be appealing to you, but you see the breadcrumbs. Now, with on the other side of that statement, you have Yahoo getting into the crypto market by opening an exchange in Japan. Yahoo may not be big in America. You still have Yahoo Finance, which is very much a reputable source of information in finance, but Yahoo is still big in Japan. And now they're capitalizing on that with their popularity in Japan by opening up a crypto market. They know in the future these markets are going to be highly liquid. They know that they can earn another stream of revenue, and they know that they can get in on something that's going to be great, another asset class that's building up on the ground floor. That is my opinion of all of that. as Dollar Will would say, they do technical analysis too.
Yeah, Yahoo Japan is actually completely different than what Yahoo in America was. They're a considered to be an ISP and everything else, so they're entirely different. The culture is different. Yahoo in Japan is really big. I think at one point it was bigger than Google.
Wow, wow. Any other
All right,
comments?
this one is from dailyhodl.com. Google ramps up crypto integration and user exposure to Bitcoin, Ether, Ripple, XRP, Litecoin, and Cardano. Internet giant Google, which runs the world's most weekly used search engine across the internet with over 3.5 billion daily searches and more than 1.2 trillion searches per year, is methodically introducing more crypto elements into its ecosystem of tools. Google appears to be working on a new way to display more cryptocurrencies when users search for a specific coin, increasing exposure to the category at large. In the screen grab below, a search for XRP returns full crypto display bar right below the search term and above top news stories. Each graphic card on the bar displays a related search for XRP, including Ripple, Bitcoin, Litecoin, IOTA, Cardano, Stellar, Dogecoin, and Ethereum. The new interface appears to be a test phase since current searches for XRP, Bitcoin, Ethereum, or any of the leading cryptocurrencies return a standard page minus the crypto search bar. Okay, I know you sent this in. What's your take on this?
Well, Google is just allowing you to get more information about cryptocurrencies. Not all, like we said at the top, the blue chip cryptocurrencies, the Bitcoin, Ethereum, XRP, EOS, Litecoin, and so forth. At the same level as if you look up um, Raytheon stock or Wynn Resort stock or Disney stock, you get all of this information, you get these charts, and you get these links you can click on to get more information. So they're doing the same thing as they do with these traditional stocks with crypto. Before, if you typed in, let's say 2017, early 2017, before that historical retailer bull run, if you typed in Bitcoin, you wouldn't have got these charts. You would have gotten these links to the Bitcoin.org website. You wouldn't have got this. So now, not Bitcoin, Google is opening up um, a lot more information to investors to know about and to get information about these cryptos that they hear everybody starting to talk about.
All right, this next one is from CoinTelegraph.com. New US stocks token let investors access US stock market with stablecoin DAI. Decentralized financial contracts platform UMA has partnered with decentralized autonomous organization maker DAO to release a token tied to United States stock market. UMA announced in a blog post on March 27th. The ERC token, ERC20 token, dubbed US stocks, seeks to offer investors access to US stock market using cryptocurrency. Users can purchase the token using maker DAO's own USD backed stablecoin, DAI. Decentralized cryptocurrency exchange DDEX is currently the platform of choice for onboarding potential investors. US stocks is an ARC20 token representing synthetic ownership of an index of the 500 largest exchange listed US stocks. This means that anybody with access to the internet and digital money can participate in US stock market, the blog post explained. The firm specifies that the token tracks an index of the top 500 firms on the New York Stock Exchange and NASDAQ. The AI exists to create an inclusive platform for economic empowerment, allowing equal access to the global financial marketplace. Maker CEO and co-founder Rune Christensen stated, adding, U.S. stocks is an exciting example of how decentralized finance can unlock economic opportunities for people regardless of geography or income level. Investors will not take ownership of any stocks, while U.S. stocks ownership represents a bet on a basket backed by DAI at an over collateralized ratio of 108.5%. I know you sent this in. What do you think about this?
Okay. Make sure. Okay. So we're starting to see a gradual move where you get this talk that, hey, with blockchain you can tokenize the traditional stock market, and deservedly so. You can tokenize the traditional stock market, and you can prevent rehypothecation. You can prevent overselling of stocks, where the full-time brokerage will sell stocks that they don't have, and then they'll sell it. So you can prevent all of that. But the regulation is not there. The SEC is not laying groundwork for these to happen. You don't see major full-time brokerage firms such as um, E-Trade and and the likes putting this through. So what you're saying, you're seeing these exchanges, crypto exchanges, do the same thing, such as Opera, such as the one we went over a couple months ago, DX Exchange, and now you have this one. Of the ones that I just mentioned, DX Exchange, I feel, and this is that they hold the better options if a person would like to go this route. But dealing with the people that this article is speaking about, you don't actually hold the stock. So if you were investing in Tesla and Apple and Facebook, Google, Amazon, you don't actually hold a tokenization representation of those stocks. It only tracks the top 500 companies on the stock market. I don't know if it's specifically the S&P 500, but the
Yes,
top.
yes, that's what it is.
Okay, so they track the S&P. So when you invest in this, I'll say a fund, then you have a piece of a percentage of the top 500 stocks. So now when the price goes up, your the price of your portfolio goes up on this exchange. And what they're doing, they're using MakerDAO. It is an ERC20 token, which means it's on the Ethereum blockchain, and they're using their DAI coin, which is tethered to the price of the dollar. So it's supposed to always stay the same. And that's what you're getting paid out in. You can switch it out to whatever you would like. So that's exactly what they're doing. They're finding a way to bring more revenue, to bring in more ways to investors to invest. That's what it is to me. These people already know that at some point the traditional stocks are going to be tokenized in some way. They know that the SEC is very slow in making that type of switch, years behind. So they're jumping on it now because they're nimble enough to make those changes, and they're offering what investors want now, currently, if that makes sense to anyone.
Yeah, I love the idea. We talked about this in the beginning of the Black Brain Trust when you guys was trying to educate over dollar, get me to understand this cryptocurrency, and I was telling you, look, I'm a trader. I'm just trying to catch the thing that's rising. I'm just in it for the price appreciation. And at some point, we got to get all these things together. Other currencies, not just cryptocurrencies, other currencies like the dollar, the euro, the Swiss franc, and the other traditional things, and other stocks, and what we discussed a year ago. You see the market turned around and is forming itself, shaping itself in that direction because there are traders and there are investors. Investors care. They have it's a they see themselves as having a relationship with the company. They take a bit of pride in owning the company, being a part of Apple's growth. Whereas traders, we just want the money. We just want the we only love the fact that the price of the stock is going higher. We don't care about voting rights. We don't really care necessarily about what that company's doing. And so when I'm talking about traders who are likely to buy an ETF, a basket of stocks in the industry. We're just trying to make the money. Day traders definitely don't care about the companies that they're buying. They're just buying a price movement on a chart. And so that's the general mindset of a trader. And so a trader is not going to care about not owning a stock certificate or actual a legal document which says I own this company. Now, a stock investor, psychologically, that might be a problem for them. But the volatility or the high spike in price of the cryptocurrency, the last time when Bitcoin went up to 20,000, the market, the trading world sees great opportunity. If you can take traditional trading on the stock market and traditional trading that's in the foreign exchange market and the trading that we saw in the cryptocurrency space and put them all in one space in one form, then it's really going to be explosive. And that's what you're seeing right now. These stable coins are a way to kind of create a proxy for the S&P 500. And on other articles on the Brain Trust, you guys talked about a stable coin that represents the US dollar, the euro, the Swiss franc. So this is paradise for a trader.
And another thing I keep hearing when people speak, when cryptos are being spoken about, the number one argument against cryptos is this volatility is too volatile. And this is coming from retail investors, not really. Well, it's coming from
Well, this
everybody.
isn't for them. This is for trade. They're gonna learn that this is not a space for them. If the volatility is too great for them, then they need to go trade something else.
Now let's take another look at this volatility aspect. If you purchase Bitcoin and you know Bitcoin, you don't know about EOS or Monero or Dash, you just know about Bitcoin because you've been hearing about it for years. Then if a person were to invest a small, very small percentage of their portfolio in Bitcoin, then the volatility on that 1% don't if it goes down, is don't really matter. But it can be a great upside if it goes up. So you can actually use the volatility to your advantage depending on how much you invest in it as a portion of your portfolio. So yes, there is volatility right now in the crypto market, but you can actually use it to your advantage. So just because you hear volatility dangerous, and you have these talking points, yes, they are talking points. And to me personally, I believe they're there to scare you, to scare people out of investing into something that they can have a bit of financial freedom come out of. But you can actually use that volatility as a positive.
Yeah, gold is volatile, and so are penny stocks, and there are people who trade those items because of the volatility. And so that's people just have to decide and go in knowing what they're dealing with. What's up, brother? Classy Black.
Mr. Research, what's going on,
Just the
brother?
research, right?
Yeah.
We're trying to catch up
On
to
a,
What's going
what.
on? What's going on, man? I'm just listening to this great insight you gentlemen have. I will just add a older man's concept is consistency. Because when I listen to you gentlemen, even when I don't get on, the only thing that because I've seen a lot in my years,
How
and
old are you, sir? How
I'm
old are
in
you, sir?
I'm in my 40s.
Oh well, man. I just so you know, I'm the elder here.
Okay,
I
okay.
just turned double nickel yesterday.
Oh, really?
congrat-
Yes, sir.
That's what's up.
Congratulations. Happy birthday.
So with that said, you've seen Web Van, you've seen some of the 1980 crap, and
Absolutely.
and people will always come and tell me Hey, it's been a year and something is hot. Next thing you know, it's not. Hey, it's been 6 months and it's hot. Next thing you know, it's not.
Right.
And with stuff like that, even like I was emailing Lynn about Lionel about the tech. You just got so much stuff that isn't consistent, man. But if that's the game that people like playing, I'm all for it. My whole part about investing is that it's supposed to do better than working a job. And for some people who are not as talented as Dollar Bill, they they are investing casually in the hopes of hitting it big and then coming out getting hurt. And I just feel like that's the wrong approach. If you're going to get in, you need to be researching. You need to this needs to be a daily, if not weekly, research thing for you. You need to be constantly on it. And there's so many people that's not, and they think, and they, I talked to somebody yesterday, and they had this, they had that, and they had that and this, and then I was like, well, you haven't even really even cleared 3Gs, and you got so much stuff going on. It's like,
Mhm.
Right. I absolutely agree with
just go get a
everything.
job.
I agree. I agree with everything you said about being informed and having education and doing research. I am against hodling. That's a bad word around me. We don't hodl. We do research. We don't hold on for dear life. Okay. We do research and we're intentional about our actions. And when we're confused, we sit our butt on the sideline until we figure it out.
There you go.
And I would like to say one more thing: when you hear on the news, the mainstream news, and I know those words have some type of trigger effects to some people, but when you do listen to the mainstream news and they do warp or um, change your thought on certain things, they're not always right. And I'll take you back when the internet first came out. Newsweek came out with an article said, "Why on earth would anyone use the internet?" You can go on YouTube right now and you hear Brian Gumbel talking about, well, what is email? I don't understand it. Why would anyone want to sit at the computer and write somebody a letter? When I can just mail a letter in at the post office and they'll get it. They don't, just because these people don't understand what these technologies are doesn't necessarily mean they're bad. Now we all see what the internet has become. You're seeing and if you're hearing my voice right now, it's coming from the internet. So these everyone doesn't know in this mainstream media what
Well,
exactly these things are.
well, to kind of rebut that though, Lionel, we really don't
Mhm.
know what the outcome will be uh culturally from the internet. So we're at the we're in like the mid run of the internet. So it's like the way I look at it, when they said those things back then, it was their culture that they grew up. Brian Gumble, when he said it, was in his 30s, and he was a hot dude on the TV show. And for them, just like for us, right now, if people start doing somebody come here from Jupiter, okay, we're gonna be like on it, and everybody's gonna be like, why are we worried about the internet when we can be going on space or what have you? And you don't know what the ramifications of that might be. It's hot right now. You know what I'm saying? You're benefiting. I'm benefiting. A couple of people are benefiting, but we could take you to the twilight zone and say, what if the children are not as benefited when you and I are grandpas? What if they're attached to a tether to a computer link in their head? We're going to say that's crazy, but see, then that won't be our culture. That'll be theirs. But we allowed the culture to come in that led to that. So I'm not saying it will happen. I'm just saying that we always got to look at that standpoint of a lot of stuff is cultural. Taxes are cultural, stocks are cultural, our career choices are cultural, and sometimes I fear the internet because we still don't have it it's too much stupid stuff that can happen to where people will say oops. And I'm getting as a tech guy, I'm tired of the oops that we do. But go ahead. That's all I wanted to say.
All
And
right, just
I'll say change in volatility. That's like central to capitalism, and we got to close this disconnect where we want we expect stability, and when we don't get it, we think something's wrong. Well, the volatility is what creates the market that that's central to capitalism. So we just have to be. This country had to do a better job of educating its people to be able to negotiate volatility. Change is constant.
Yeah, but a volatility only really uh yeah, well, let me say it like this. Wall Street wants Main Street to constantly bail them out. So if volatility is really such a thing that we should be educated on, then we also have to educate Wall Street on never come to Main Street to get a bailout there because volatility is part of the game. Every time they go back to Main Street, we messed up. Oops. We need to raise y'all taxes to get us out of the volatility that we love.
But
No.
can I make a statement?
Fair enough. I mean,
Um,
when the subject was Chrysler, it sounds like you're right. But when we were talking about the banking system, that's a great debate. Before we're gonna have to. That's a good debate for a whole show. So when something is too big to fail, or a mistake price is too great to pay.
but
But
doesn't Wall Street capitalize on the Wall Street like volatility, but the average man on the street likes to have things, moving smoothly, no ups and downs, and that's what Wall Street uses against the average man.
that
You
doesn't
know,
exist
what we
anywhere,
like
though.
doing, and then when we need bailout, well, if we get this bailout, we will go back to work the way things are. There'll be good jobs.
Well, well, even better, Wall Street goes off speculation. I think DE is going to turn into an eagle. Let's put money toward that. Let's let that money sit for a while and see how close he comes to an eagle. Oh, he tweeted about an eagle. I gained some money from that. So it's more speculation than anything, and that's not to knock it, but it goes against people's normal lives. So ever since Clinton opened the floodgates with NAFTA, see, things were really restricted before NAFTA. When he opened the floodgates, it allowed people to say, great, now I get to keep my tax shelter and not pay taxes, and I get to have all these loopholes. I get to have cheaper labor, and it all affects stocks. It all affects stocks. So as long as they have mainstream, and to Dollar Bill's point, nothing is smooth sailing, but it's disingenuous for the culture of stock and traders to say we love the game we're playing, and if we ever mess up, which is a thing for another day, like Bill said, we're gonna go back to Mike and take money out of his kids' pockets because me and Dollar Bill messed up on this little IBM thing. And Mike is forced to do it because Linnell is head of the Congress right now, and irregardless whether Mike likes it or not, he's just going to pass the law, and that's just how it's going to go.
I need to get to this one last article on the docket. All right, this last one is from CryptoBriefing.com. If only I had invested $1,000 in these five cryptos. March return on investment update. Cryptocurrency investing over the short term is not for the weak or will. It's not for those who are obsessively check for their Blockfolio app every 5 minutes, trying to catch the top. It's certainly not for those who think that the value is driven by the size of a user base or a product fit. Maybe later it will be. For now, the news the news drives price, especially news that spreads from whispers in Telegram groups, reaching the ears of the well-connected who quietly stock up on crypto tokens before the public is aware that anything's going on. But you know all of that. What you don't know is who's next. While Tezos coincidentally goes through the roof before Coinbase even announces staking, what what are the rest of us thinking about? Don't ask us, or at least not quite yet. You will need to subscribe to our newsletter for that. So, um, let's go through the basket of the 10 cryptos. Top 10 crypto picks. Binance Coin, 73% return on investment. Tezos, 101% return on investment. What is this? Shangpeng Zhao, 73% return on investment. I heard of that one. Everex, 309% return on investment. Ravencoin, 439% return on investment. I know. Can you speak to any of these coins?
Yeah, Binance Coin, Changpeng Zhao is the CEO of Binance, so I don't know why they put him in there. Makes me question this article now. But
Mhm.
with Binance Coin, they have their own blockchain. What it right now, how it's set up is you can use Binance Coin to if you have it on the exchange, you can get discounts on your trades. Not only that, but Binance Coin has launched a launchpad where let's say ICOs, but people who want to launch their own coins are vetted before they are able to get on the Binance Launchpad, which means you have a better chance of not losing your money as in a regular ICO, where someone can take your money and run away, which those have happened. But that's not to say it's 100%. So with Binance Coin, what they have now is if a an investor wants to purchase these coins that let's say someone is launching off Binance Launchpad, they have to have to hold an X amount of Binance coins because it's a lottery pick now. So that's why Binance coin is going up in value. With the other ones, such as Ravencoin and Tezos, those are staking coins, which means staking, you have proof of work, but now you have staking, which means if you keep your coins in a wallet and you keep them there, and depending on how many coins you have, then you'll be picked to forge the next block on the blockchain, um, broadcast the next block on the blockchain, and for that you'll be rewarded in whatever coin that you are staking. You just have sitting in your wallet. In this case, you have Tezos, Raven, and Raven also you actually Raven you can mine that, so you mine it, you get rewards. So that's why at least those two coins they have high R. Well, those three coins you have high ROI. Now, with anybody that invests in crypto, they would say, well, instead of you investing in any coin from anywhere, then just invest in the top coins, the blue chips such as the Bitcoin, Ethereum, EOS, Litecoin, Tron, Cardano, XRP. Invest in those because you have a better chance of having your whatever you invest go up. Not financial advice. Please go to a cop.net financial advisor in your area. But that's more of a safer bet, in my opinion.
Is that because of the rules, Lionel, that each, because I know Ravens Coin has, because you just speak about Ravens Coin, I know they have a bunch of them. Do you think that's because the rules are very detailed on those coins?
When you say rules, what do you mean by rules?
You have to do this. You can only do that. There's repercussions for this. Do
Oh,
you think that's the reason?
no, because a lot of coins are staking coins now. Not to, I think there's more staking coins than there are proof of work. And what staking is, you if you have 1,000 Raven coins in your Raven wallet, then depending on the weight of your wallet, and what I mean by the weight of your wallet is the number of coins that you have on there, then you chose more than someone who have 10 or one. So the proof of stake is biased. The proof of stake protocol is biased towards um, big time investors, whales. So
Okay.
if you have a million Raven coin, I only got 1,000, then you're going to get chosen many more times to um, broadcast the next block on Ravencoin blockchain, and that's with any proof of stake protocol. So that's why so if you have more money invested in that coin, then your ROI will be higher than mine.
Hey, Dollar
Maybe.
Will, if you want to spin up that bar chart, go ahead.
Cool, cool.
What
Let's
were you
see.
gonna say?
No,
You
I
search.
was just saying, Lionel, that made great sense. I like the fact that more rules are coming in, no matter what it is. I just really appreciate the rules.
Thank you, appreciate it.
Mhm.
Let's see. Oh crap! I don't want to put all this stuff in here again. Okay, can you guys you can see this chart here?
We
Yep.
good?
Okay, what we're looking at is this is this is the US dollar since oh crap, I need to since 19 May of 1971. You can see the date at the bottom of the screen. So this is what I was saying earlier. This is around the time when we basically came off the gold standard and the currency started floating. Um, what happened? What basically, if I could get something to show like the price of like basic materials, um, metals and energy and oil, you can see that there's an inverse relationship that happened around this time where oil would trend higher and gold would trend higher and the currency would trend lower. Just as like just making a pictorial image of why you're supposed to take your money and buy a house. Okay, this makes it very clear because a house is a collection of a lot of basic materials. And when you buy a house, you're trading the dollar for materials, and the price chart shows that inverse relationship. Now, when the dollar rises in these aberrant periods, it doesn't happen, much. Um, that these are going to be stressful times for housing, oil, gold, those materials. So, and the euro, the Swiss franc, and so that's when you get these countries complaining about the dollar strength, but they don't. They generally they're not complaining because all this decline here makes their currency go higher. Okay, so their spending power increases. Okay, it's just that in this period, um, the dollar has not been falling or playing the game of continuing to decline. Now, in Elliott wave theory, we have five waves, and and this is my idea of the wave count. The basic rule is wave four does not encroach upon wave one. So if there's a price low like here, I'm calling this wave one. If there's a drop in the price and the price springs back and it goes encroaches upon wave one, then this isn't wave four. Okay, I'm saying my opinion is this is wave four since 2011. The rule is wave four cannot go past the low of wave one. So we're a good deal away. Um, that's in short, without, I'm trying to really oversimplify. In short, well, now I'm seeing something that making me curious. Hold on, you guys, just side. I just want to see something. I just want to see. How close are we? Oh, so we already broke that. Okay. All right. So yeah, so we broke that downtrend from there. All right. Um, the dollar has higher to go. I I'm about to go to a daily chart, and we're going to be looking at this section. Let me just try to zoom in here. The dollar has not taken out a higher high. So we have all these highs right here. We haven't taken out any of them, but we have been trending higher since July of 2011. But if you listen to the news, the way that they report the news, they don't report it in context that the dollar keeps making a higher low. You see, this is low, and then you see this low here, but it's higher than this low. So we're making a higher low. We got a high here. We got a higher high here, and I maintain that we're in uh in pursuit of making a new high. So the high since 2011 happened in 2015, the fall of 2015. Okay. I maintain we're going to take that out. So we'll see if I'm right or if I'm wrong. And the dollar is in pursuit of taking out one of these highs. You know, it's gonna once we break above this, I'll have more data to be able to make a better projection on where we're going to end. But this is the ceiling for where the low of wave one is. We've got a long way to go. So this is what is scaring people with oil and gold. Let's see. On the daily chart, this is the same thing. I'm looking at this symbol we were looking at is the dollar versus Swiss franc. I could just as well be looking at the dollar versus the euro, the dollar versus gold. It's still going to look pretty much like this. So what we're looking at here is the daily chart. The dollar has been falling recently since good little fall since the beginning of March. And let me give you a bigger perspective. We've been trending since we had a nice downturn here from May of last year to like what's this, August, and we kind of pretty much been trending higher. And then so that high that we were looking at on that other chart from 2015, that's I think that's over here, back here. But we're not. This is it. Yeah, this red line is it. That high from fall of 2015. That's what this red line represents. This push higher from this oversold state that we're in right now, which is freaking gold out right now, which I said last week would happen. Okay, this move up is key. How high will the dollar move as the momentum indicator goes from oversold to overbought? Will we make a new high here? If we make a new high here, then this line here puts us in clear shot without much in the way of resistance to run us right to that 2015 high and make a new high. And that will be the highest point of the dollar since year 2011, and that will freak the markets out. That's going to stop all this talk about no more interest rate increases and all of that. So, and I believe the Fed is looking at this same point just like Dollar Will is. They're doing the same thing I'm doing, looking at this chart, and that's why they went neutral. Neutral means get back to me later. That's what it means. Okay. So I think the Fed did the right thing. They didn't want to go bullish. They didn't want to go bearish. They're like, look, it's better for us to be safe and let the chart do what it's going to do. Again, I'm of the opinion that the Fed don't control the market. They react to it. They react to the prices, and they position America in the best place to either minimize damage or make profit from it. So I think their neutral position was a responsible position. Now earlier we were talking about the rupee, I believe. Okay, so I'm go back to my long view, the Indian rupee. Now this is all the data I have about it, so I don't have of rupee going back very far. But we see, just keep in mind here, this is the 2011. This is the low in the dollar. So when a lot of people talk about the dollar, but they've never even seen a chart of the thing going back to 1970. So it's hard to get people to understand that the normative state of the dollar is to fall. It's the rising parts that creates havoc, because this again reduces the price of oil, reduces the price of your home. It reduces the price of other currencies around the world, which causes them to complain. But whenever this dollar run is over, whenever we finish this run, as we approach what I'm calling wave one, and this wave four is according to classic Elliott wave theory, is not supposed to exceed this, and this is a beautiful wave. It looks pretty classic and pure, and as far as Elliott waves go, this is an easy one. Okay, when the dollar finishes its run and resumes its death spiral, I believe. So, I mean, this low here is in the neighborhood of like 70 something cents. Where's the high low? I can't see on this chart. I can't even see the price low. Let me see. Eyes to the right. It's like, let me zoom in. It's not. I can't get the scale. It's something like, it's like 70 something, 76 cents or something like that relative to the Swiss franc. When we finish this move higher and start going lower, the dollar's going below 50 cents. It's going below 50 cents. So if you're an American and you want to travel to Europe or somewhere like that, and you always want to go, you better go, as this dollar is getting stronger and their currency is getting weaker, because you can go to those other countries and feel like a rich American. When this dollar starts falling, you're not going to them countries, because you're too poor to go to them countries at that point. When the dollar is falling, that's why you see Europeans and Japanese coming to America, okay? Because they're rich. Their currency is so strong compared to our dollar. But as this thing rises, we get to travel to their countries. So if just as a sidebar, if you want to go to any of these European countries, you better go now, because now, you can afford it. But when the dollar resumes this downward spiral, that is when cryptocurrency will be useful and vital, because it will give us another way to preserve the spending power of our money just by moving your dollars into another currency. I remember this was prior to as we approached this 2011 low. There were some actors in Hollywood who were putting it in their contract that when they made their movies, they didn't want to be paid in US dollars because the value of it was so low. They wanted to be paid in euros, and the euro was at a peak right at this moment. But of course, as the euro started falling and the dollar started rising, you haven't heard no more about that. Okay, but that's so a lot of rich folks would go to Europe, and they would go open up bank accounts there, and they would move their money to other currencies as the dollar was falling, and their money would rise in power just by sitting in another currency. Now, I'm kind of leading up to that article that Lionel we were talking about that exchange with the stable coins. So now
I see where you're going.
you don't have to go and open up a bank account in Europe now. You could take your paycheck and just move some of your money to that exchange and put your money in a cryptocurrency or a stable coin, which represents the euro or the Swiss franc. So now the working Joe like you and I can play the same game of protecting our spending power by moving to another currency without having to go to Europe and open up a bank account. It's powerful. I love
see
it.
what you're saying.
I love it.
I would say great, but just make sure it's a stable currency, or as stable as best as possible.
Well, here's my answer to that. just make sure you start to learn technical analysis so that we can navigate the constant change and know when something is rising, when the volatility is benefiting us as opposed to when the volatility is punishing us. Because it's either going to be, prices can only move up, down, or sideways.
True.
So as long as the price or the volatility is trending, in this case, the price is moving up, then we're good. But when the price is moving down, you don't want your money in that. So ignorance is not bliss when it comes to your money. And so this thing of technical analysis, knowing how to read charts and knowing the relationship between the hard currency and materials like steel and aluminum and oil, which we have a glut of now, which is why Trump has the tariffs, because China was trying to dump their excess on us, because everybody's trying to manage the excess that they built up during the greed phase. And the greed phase is when the dollar was falling. It was a time to hoard all those other materials because you could always sell it later for a higher price. But the dollar did a fake out move and stopped falling. And so now they're in a race to get rid of this crap, because now they can't sell it for more money than it cost them to extract it. They have to sell it for less money, and then they have to pay storage fee for this crap. So as a friend of mine likes to say, the greedy becomes the needy. Okay, so Trump was like, no, you're not going to dump your excess on America. So that's just all part of the game of when the currency is falling, you invest in the commodities. You even go to the bank and get loans at what? Lower interest rate, because the currency is falling. So you go get your lower interest rate loan. You buy you some gold or some houses, which just puts you in an upward trend in the value cycle. And so so the big guys, the rich folks, they know all of this. So they know when to be in currency, when to be in gold and houses, and when to sell this stuff. And so that's what we're trying to do here on the Brain Trust, to hip everybody to that same game. But we were talking about the rupee earlier. Okay. Now the data is showing. So this is the 2011 low, and this is what I was talking about when I'm trying to line it up. There you go. So you can see the purple this is the rupee versus the dollar, and you can see above it is the dollar versus the Swiss franc. So you can see that this is let me say it correctly. This is, let's see. It's a brain twist. This is,
Would you say a brain trust?
yeah, this is using rupees to buy dollars.
Mm-hmm.
And if the dollar is stronger, then your rupees, you're losing money. No, it's the reverse.
The rupee is moving stronger than the dollar at the moment.
Right here, for this moment. This is what I was objecting to. Only for this moment. See, this purple line is showing the relationship of the rupee to the dollar. So it's been falling since 2011. But that article is talking about a recent time, and this date says since September of 2018. So that's a pretty good, what are we talking, 6 or 7 or 9 months? But I'm just saying, as a chart reader, you just have to be mindful that in the bigger picture, it has not been rising against the dollar. It's only for aberrant points like here. And overall, if you're going to look at a multi-year since 2011, it's been falling. So just as this high here can't be trusted, this high can't be trusted, this high can't be trusted, this one can't be trusted either. So you stay tuned to that same author of that article. And when you come back in a couple of weeks, and he's going to tell you about how the rupee is struggling now against the dollar. So that's why you have to be a chart reader, so you can put these news stories in perspective. Because the people in the media, they're telling you what's happening today without giving you putting it in the context of time, say the last decade, so you can understand the relative importance of the news today. But they make everything sound so urgent on a day-to-day basis, and it's not. You have to look at it in context of the trend. So I mean, so yeah, did people make a lot of money since September? Absolutely. But the price is reaching this ceiling. This floor here becomes a ceiling once the price crashes through it, and so you got the price now bucking up against this ceiling. Okay, and the saying in trading world is support, which is what this was before the price fell through it. That support becomes resistance when the price springs back towards it. The floor becomes the ceiling. You can think of it that way. So that's what I want to show relative to the ruby. Now I'm just going to take a peek at this is the euro. You know, the euro, I don't think it's going to go all the way back either. Let me see. Trying to. Right. Okay. Of course, the euro has not been around since 1971, so we don't have all that data to go back that far. I'm gonna just try to go. And what is this in terms of time? This is 2001. So you can kind of see the inverse relationship, right? From 2001 to 2011, the dollar was going down, and the actors in Hollywood, a lot of the big ones were saying, pay me in euros. Put my money in a euro bank account so that when my money is just sitting in the bank, it rises. Don't pay me in US dollars. Okay. But when the dollar hit the bottom, they cut that. I ain't heard no more about that. Now the world wants to buy US dollars now because this decline that's happening to the euro is happening, and that we already saw the decline that was happening to the rupee. This is happening to a lot of currencies. So the dollar is the safe haven, as you know, as it were. And during this period where the dollar is in demand, doesn't it make sense that this is when you would raise the interest rate? Because if everybody's got what you want, you can make them pay a premium for it.
Mm-hmm.
So we'll just see how it turns out. You know, I'm of the camp that the dollar's going higher, and so is the interest rate. But we'll see. You know, but if I'm wrong, I'm gonna look silly because it's recorded. You know, I can't duck it. You know, everybody hears me, and you'll be able to go and you know, check it out. Now,
No,
let me see. Go ahead.
no, I was just gonna ask, can you look at silver and gold?
Okay, first I want to look at oil. Yeah, I'm gonna do that. And the site that I'm on, it uses a form of trading view, but this site is called Daily FX. It's a very good site, and they had another free chart place. Okay, I chose this site because I know that their dollar data goes all the way back to 1971, and so that's why I chose it. But okay, so we got here. Let me see. Okay. Oh, I know it looks weird, but this is 71 here. And the black is oil. I made that black for obvious reason. And we see the oil rising. Let me try to, this is hard to show, but we can basically get the point. 1999. Yep, this is at the end of the dot. Was that, yes, that was the .com, the internet bubble burst, and gold came out of a long sideways move, and this is when oil rose to that $147 a barrel. That, yeah, all that was going on, and the dollar was taking a beating. And so we see, yeah, so this, all that was going on as the dollar was taking a beat. Now it's not one for one. If we can see here, it's not a mirror, exact mirror. It does get close to a mirror when we're gonna look at gold. But it's not one for one. All that to say that, but it's close. Let me see. This high here in oil was in 2008. Okay. So it's been a long time. So oil basically, the high the oil has been starting to decline. We're talking 11 years ago. Okay, so but if you listen to the news, you know, you would think that, oh, oil is in a heyday. No, oil has really just been in a good heyday since around January 2016, year 2016. Now remember that high that I showed on that area down in here, and with a peak for the dollar, it corresponded to that. It was the fall of 2015, and this low in oil was January 2016. So when the dollar peaked and started falling, that corresponded with the oil rising. And oil has been struggling. You know, it took this nasty dip, and I'm of the opinion it's getting ready to flip right now or very soon and continue falling. And the market is going to be looking at this low to see if this low is going to hold. Um, I don't have an opinion on it right now, whether it will or won't, but I am of the opinion that it will. We are going to go down from here. It very well could flip and retest this bottom, come right like very close within. It could come within a few dollars of this exact low, and that would be nothing aberrant technically about it. The reason what the the
What's that low?
uh this is symbol I'm using is called US oil, and this low is 33.73, and I think this is like closing price of the day. I don't think it's the intraday low, and like yeah, I know it's not because this high says 140, but the
Yeah,
but the intraday high I believe was 147. So this might be closing prices on what I'm looking at here. So what here is, if I'm in Elliott wave theory, retraces have an ABC pattern. And this looks like an ABC pattern to me. So I don't even really want, because of that, I do believe we're going lower, but I would be very cautious about betting that we take out this low, you know. But I it wouldn't be aberrant or anything out of the ordinary for us to retest this low, come right back down to this $33 level. And there was another article I think you guys were reading earlier where Exxon said that, check this out, that they could make a profit even if oil went down to $35 a barrel. That's not a coincidence when the low is 33. So they're reassuring traders and investors that they, being Exxon, that they can remain profitable even if oil was $35 a barrel.
that doesn't sound right. At least according to the previous article that we read about Saudi Arabia wanting to move it up to $80 a barrel. That was
Right,
their goal.
right, right. But I'm just saying, so you got a little PR in there with Exxon. Now, as a trader, my view is I wouldn't be holding it as it's dropping. Okay, it's just too many other places you can put your money. But see, that's an investor mindset versus a trader. I'm a trader. The investor, they marry these companies. It's, they consider it like disloyal to sell. Look, I just want the money. I'm only here for the good times. Okay.
Hmm.
So that's for every individual to figure out, are they a trader or a investor? I am a trader. I'm going to bring up gold now.
Before, before you do that, can I just take 30 seconds?
Yes, sir.
Isn't Exxon and Saudi the same thing?
Not necessarily.
Saudi owns Exxon.
Yeah, but Aramco is a different entity in terms of the market itself.
Okay, I didn't think anything moved without the prince's say so. So I just look at it all as one thing.
Well, yeah, we're in the oil war right now, which is what we were talking about earlier. We're in the oil. I think you weren't on. I don't think you were
No, I
on, but
wasn't on at that time.
yeah, but we're in a bit of an oil war. So the United States is outputting. They produce 13 million barrels of oil per day compared to Saudi Arabia, um, and more so than Saudi Arabia. I think almost twice or something like that. And but we only move about 3.5 million
Well,
out of the
well,
country. We export
well,
about 3.5 million.
well, being that the the dollar is mostly the way it is because of oil.
Yeah.
Uh, wouldn't going back to that to what Bill said about pre 2011 and the Saudis are funny because and I know Will knows this. They will hold back data on how well or terrible they're doing. So it's kind of funny to judge them. But I guess my question is,
Hmm.
if the oil is on the dollar and we just had a cultural shift in Libya, Syria, and Georgia, and Putin definitely runs Georgia and will soon run Syria, why would the dollar not shoot up?
Well, because
Bill?
there's a different there's different attributes as to why the dollar wouldn't shoot up, but it wouldn't be because of that. If anything, the price of oil per barrel would actually shoot up. That would cause it to spike up to close to 100 plus dollars per barrel. Um,
Right. Right.
if another conflict does take place, such as Venezuela, that could have really shoot up the barrel of oil, per dollar. Or
Yeah,
the
that's what I
or
mean. I mean, we don't really control much anymore since what happened to Libya and Georgia and Syria. So wouldn't it, even if you threw Venezuela in the mix, isn't that going to spike it up? Maybe I'm wrong.
Well, you know
Yeah,
what?
it
May I?
will spike.
May I?
Go ahead, sir.
I just want to I want to keep everybody focused for this moment that I'm doing my presentation on a technical perspective of it, because what that's interesting what you guys are doing, and just remember, hold on to this dialogue you're doing,
Yep.
and when I'm done, go back to it and pick up where you are, because this is uh the divide between the fundamental perspective and the technical perspective.
Hmm.
um the idea that the the assumption that because of logic that war will make oil go up, or oil will that war will make the stock market go down. That history doesn't validate that.
Actually, it does.
I have
That's
a video, my first video I put up in January of 2018. I do a study going back to like the early 1900s, and I show how the actions of the stock market during was it World War II. I also talked about 9/11, different things like that. It's something that people believe, that all it takes is one or two examples for me to prove that it's wrong. Okay, so, I mean, again, prices can only go up, down, or sideways. So
1973.
it's easy with such limited actions of a price. It's easy to 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 assume that there's a causation
Oh, that's interesting.
as opposed to a correlation. Okay, it's not exactly a cause and effect relationship that we have. But you guys, when I finish this, as you guys debate it, I'm gonna pull up. I'm gonna see if I can pull up something while y'all talk to make my point, that we can look at some things in history, and the burden is on me to prove that even in war, that the price will do something counter to the logic that war makes prices go down. It's I believe we fight because of the prices. I don't think the war causes the price movement. I think the price movement causes the war. That's we're fighting over the control over our resources that are valuable. the fights are about money. We're not fighting for no reason. We're fighting about power and money. So, but anyway, that's a whole nother thing. But you said about gold. I was looking
Gold and silver.
for what I have about to bring up is a gold versus the dollar chart. I can bring up silver after. I couldn't find a gold currency that goes back to 71, not this quickly, because a lot of the data, some exchanges provide more data. And so, but I do have data that goes back to this basic area. So when I bring up the gold versus the dollar, this dollar versus Swiss franc chart is going to get smaller. So just keep your eye on this part right here, and you'll see gold go up, but just keep this in your mind that the dollar went down right here. Okay, so there's that inverse relationship right there. So, and here's that 2011 right here for the dollar, and it generally is close to the peak in gold. Okay, and again, this is my opinion. I don't really see an ABC pattern right here. This is not enough. Okay, I see an A and I see a B, and I maintain we got a C wave coming that's going to take this gold below this low. It's got further to go down, and that's the inverse of my view that the dollar has higher to go to get us up to this wave one threshold. Okay, so clearly we see the inverse relationship right here. And we see the rise of the dollar in 2011 corresponding generally with the decline in gold. So that's why I'm Dollar Will. I trade dollar. The dollar is the base currency of the world. It's the price of materials are based in that. Your car, your house, your job, everything traces to the value of the dollar versus these commodities. Okay, so if you just study this one relationship, you'll have your pace on your finger on the pulse of the trend of money, in the world. So now I flipped it with the dollar at the bottom. I believe this thing is going to fall here and the dollar is going to go higher. So this is since 2011. But you wanted me to look at silver.
Yes.
Okay, I took that off. And you got this little compare button right here. I'm going to use an ETF. So I share silver. Okay, so we got at the top here, we got the US dollar blue, and we got silver falling. So the same inverse relationship. Okay, it's the dollar versus energy in the form of oil, natural gas, etc. And it's also the dollar on one side of the seesaw versus metals, which would be gold, silver, the rest of the metals complex, including steel, aluminum. Even on the energy side, I guess I got to put coal on the energy side also. We forget about coal, but I think coal's going to come back. We got the environmentalists saying that they shut down coal. I'm not buying it. Our departure from coal coincided with the peak in energy and the rise in the dollar, and people are declaring a victory. I'm not buying it. Coal used to be called King Coal. That's how long coal ran the show. It was called King Coal. And when we make this rise in oil again, there will come a time where oil will be so expensive that we will burn coal again. But anyway, this is silver. I'm just going to go to the 2011 part again. So I'm putting that peak on the wall. All right, so yeah, this is the decline in silver. This is the rise in dollar, and I maintain that it's still going to keep falling. That we're not there. I see an A, B, a C wave has to happen. Silver's got to go down more. Dollar's got more to go, and as the dollar rises, so will that interest rate. That's just my opinion. But just as from The part that's my opinion is that the interest rate's going to go higher. Okay, the part that says we have higher to go to complete this wave, that's basic Elliott wave. The part that this is not really an ABC pattern. I feel pretty confident saying that that's basic Elliott wave trend analysis. Okay, that we don't have an ABC pattern here. So silver has more to go. So we have a nice little bottom right here. It'd be interesting to see if what silver does when it approaches this low. I would expect it to go just below this point. And this point is dang, $9.58. Whoa. And the high was again, I believe we're talking closing prices here. And the high was $46. And
When was
this
the
is
high?
$46.
No, when was it?
Uh April 2011.
Yeah,
This
sounds
is a
about right.
monthly chart. April 2011. And see the high in silver what happened a little before the low in gold. So it's silver, the high was in April, the gold bottom was in June of 2011. So it's not exact, but they're close. They're
Mhm.
close, you know. So my view has always been I wanted no part of cryptocurrency until the dollar does its thing, finishes its run. A year ago, people interpreted that as, oh, dollars against crypto. No, I'm just pro technical analysis. Okay. Now, but when the dollar finishes its run, I will want nothing to do with it. I'm gonna be buying me some Ripple and some Ethereum. I'm gonna be talking to Lionel and Mike and getting some more information to try to really plan which one is going to have the best use case. I'm pretty certain that I'm not going to focus on Bitcoin because with that exchange, with all those stable coins, all being on the same exchange, we're not going to need to use Bitcoin anymore to move from one cryptocurrency to, I don't want to say from one cryptocurrency to another. I want to say from one cryptocurrency to something else because it could be a stable coin representing a more traditional fiat currency like the dollar or the euro or franc or the what's the one, the British pound, and or it could be what you were talking about, a stable coin representing the S&P 500. So if I have other ways of moving within within the currency space and the say the major stock market index space, if I don't need Bitcoin for that, you know, I'm not sold that Bitcoin's going to be the one the next go round. But is there anything else that you wanted to see?
Mr. Research, if you have anything you want Dollar to pull up, now's the time to do so.
No, the only thing I want to just was to quickly reiterate is that again, I look at these things based on culture. I love the numbers. That's why I come here. I love to hear the numbers. But I'm looking at the culture of certain things, just like what he said about coal. I don't think coal is going anywhere because it's culturally ingrained in those people's lives. So they're going to find some way to make it uh, usable, if for nothing else, in their area. But that's all I wanted to insert.
Okay.
This thing won't let me stop sharing.
Yeah, I see that. Can you log off and log back on?
Trying to kick me off the show, man.
Oh, not this week.
Okay. All right, that would do it.
So, Mr. Research, you were talking about tech companies earlier.
Yeah, I kind of missed that.
Yeah, were you talking about investing into tech companies? What was the discussion? I kind of missed that.
Well, I work at night at a tech company. We are trying to create AI where IBM's competition. And in
Mhm.
the daytime, I work in medical finance doing the underwriting and what have you. But no, I just did a quick mention that sometimes things are not what they appear to be, and they're so brand new. And people say, "Oh yeah, this is going to happen. This is going to happen." And I don't know if you guys saw that HBO special with the lady had this little blood thing that she sold to Walgreens, and you know,
Toronto.
she, yeah, yeah, and she was 900 million in before they really figured out that the thing didn't work. But just imagine, people actually gave up 900 mil and a contract for Walgreens and everything for something that they weren't even sure actually worked. They just read it in articles, and that's why I say articles are so dangerous, because we really had to source a lot of stuff and give it a little 4 or 5 year run before you really know about it. And I think I was talking to Lionel in email about how a lot of the quote unquote driverless cars are not really drivable. It's just something that they put out there to try to train the public. But we've had so much stuff out here in Silicon Valley, and now we don't have it no more. Like I laugh at the Google driverless cars we used to have. Now you don't even see them on the road no more because it was too many underwriting problems.
Yeah, I want to thank you for that because I never heard of that perspective until you shared it, and it just it made sense. I mean, I think they're gonna figure it all out at some point, but the fact that they haven't and the liability issues that you point out, that makes a lot of sense.
Yeah, and I think I just want to reiterate is that the sad part is the lies, the lies that they tell in articles, the lies that they put out, and then if you're not experiencing it on a daily basis, like shoot, I just moved back here to San Francisco 2016. I didn't think it was this bad, but man, you got Google buys a whole city, a city with houses on it, and
Yep.
only it they only operate these cars on their property. And then when something happens, all of a sudden, oh well, we actually own the property. And you see these little miniature signs all around the city. If anything ever happens, we're not liable. Huh? How is that fair? So then you start realizing, we need to start finding Google, finding Facebook. So now the next thing I think is going to happen is Congress is, and just like you said, they're going to figure it out. Congress is going to figure out a way to penalize technology because technology has been getting away for too long with the oops, we won't do it again model.
Well, there's an AI tax that's been proposed already. So
Well,
that's been on the docket for about maybe a couple of years now about an AI tax. But the idea of these tech companies buying up small cities and towns for that matter, it's not uncommon because a lot of the times those towns are very hurting for profits anyway, so they're already on the chopping block. Um, I think from our perspective, Lionel, myself, and the rest of the Black Brain Trust have talked about this before, is that this is a perfect opportunity for Black people to start developing autonomous vehicles in Africa because
oh
the
yeah,
infrastructure is ripe for that sort of development. Um, because you're not going to do any of the heavy lifting, but you're going to actually do a lot of the architectural designs of an autonomous highway and an autonomous road space and things of that nature, and all the other um, subcomponents of the infrastructure that goes with it, such as the light post and um, the fiber optic layouts and the copper layouts and the wireless infrastructure that goes into place. That all that stuff is part of the fourth industrial rollout. So um,
I
it's
agree.
that's where we are. That's where we are right now.
I agree, but I would also say to the Brain Trust that I don't think we need to go in and be brain drained or to really do the labor. I think we need to get back to our union mindset first. So when we go out as a group collective, that we go out where we can't be split apart. Hypothetically, let's say that we do go out, lay out one of these things. Okay, even if a white man joins our thing, it's our union. We run it. In order to be to even be part of this contract, you're running through our union. The same thing they did back in the days when the porters. Uh, 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 you had people who owned the company, but you can't make no porter moves without our porter approval. And that's where I think the more strength of whatever we do is going to be at. You now have this thing called black men in white coats, which is taking over medical now. A lot of brothers are trying to get under one banner, and that's the thing I would say. It's not so much go do it and be a contractor, because a contractor can be easily removed once big Asian money comes in or big Irish money comes in. I think we need to really be in the underwriting of things and the union of things. What are your thoughts, Mike?
My thoughts on that is it's an interesting take. I think everybody, whether you're a contractor, a temp worker, or whatever, I think all jobs are LTE at this point. We saw with the last 6 months we've been covering it. Automation and artificial intelligence has decimated at least 600,000 jobs in the United States. One quarter of those jobs are fulfilled by African American women. So we're seeing a major shift that hasn't been seen before in terms of job losses. Sears going out of business, AJ Wright, and all these other retailers going out of business, not being able to keep up with the online sales and the online monsters like Amazon. Amazon decimating all these brands and forcing a lot of these retail outlets to close. Landlords, who own malls and strip malls, you know, um, a lot of those places are going vacant, not knowing what to do with the property. Property sitting there, collecting dust. Um, there's major shifts happening, and I think we're not taking advantage of those opportunities.
And
First and
also,
foremost, I think a union makes sense. Um, maybe maybe in another place where black people have more power in terms of their numbers. But as it is right now, it's becoming more of a meritocracy society where your skill set is going to get you by, and not so much anything else. We see automated trucks coming online. Volvo, we covered an article before that Volvo already has automated vehicles, automated dump trucks in place in Africa. Um, moving precious metals and stuff like that.
uh,
Mr. Research, I was looking at some chart stuff, and I kind of heard what you said when you said union. You pull my chain there. I'm with you. I guess I push got a little pushback for you, Mike. The basic nature of uh, uh, profit forces, the relationship between labor and management, the whole, the drive to exploit the common man. It's nothing about that has changed. So we need unions. We need, it's a cycle. When industries are new, there's like a honeymoon period, and when demand is great for workers, and that for that period where the demand is great, the workers have the power, and the companies need to court you and treat you well. But as those industries become mature, they and capitalistic forces produce the labor to satisfy the shortage. As that labor shortage is satisfied, the exploitation happens at that point. But so we're just in the baby stage of a lot of these new technologies, and especially like your field, cybersecurity. The demand has not been filled, so you're treated great, but the workforce or capitalistic forces, meaning the money that can be made teaching people that skill, what's going to follow is an oversupply. These gray hairs on my head, Mr. Research was talking about earlier. When you live long enough to see these cycles, that's just what's going to happen. We always overshoot. We always produce too many of the thing. The government always sits back and lets it happen too. You know.
Well, I wasn't disagreeing. I wasn't disagreeing about the union part. What I was referring to is that the way that the market is moving to a more gig-based economy where your skill set is going to be more determining than your union itself.
Yeah.
Um,
I'll say where we
it's going
agree.
to be less.
I'll say where we agree on the Black Brain Trust. Brothers need to be in these areas where there's demand, so that we can be in a meritocratic environment.
That's
because
my point.
because racism, discrimination is lower in those areas.
Right.
I came when I got in media in the '80s. This was my high school project was to go to the city council in Washington D.C. when Bob Johnson was bidding on the cable franchise, and he was bidding against what's the brother, Percy Sutton, who owned the Apollo Theater. He was trying to get it, and I forgot who got it. But so my job was to go, and my assignment in high school was to go and sit and watch these debates. The response to the RFP, request for proposals, from the DC City Council. And so we knew then that, wow, we only have like what, 6 or 7 or 8 TV stations right now. So you guys don't know anything about only having a handful of TV stations,
Right.
And so we went from a handful of TV stations that signed off at night to the talk of having 500 TV stations. And we needed more of everything, more, you name it, camera guys, lighting technicians, sound guys, reporters, writers. And so so media became this sexy, high paying field. It's what IT is today. And so, but then the university, it took a while. It took maybe about 15 years for universities to jump on it and put the programs in their curriculum. In that 15-year vacuum, companies did a lot of on-the-job training. You could teach yourself, and you could find a way in if you were really determined. But
I,
over time, an oversupply happened, and that's where you got all these people with this big college debt, with these quote unquote useless degrees. Because
well, see, I think Mike's point, and he says it quite often, is that this is the way things are going. And what I would suggest, and I think will
I'm saying the way things are going is the way they have gone. That's what I'm
right.
saying.
That's my point. My
Okay.
point is that we really don't know the way things are going, because the way things are going, eh, it it's okay. Let's take Amazon for example. Amazon has shut out the mom and pop stores along with Walmart. But now Amazon has got to the point where now it until Bezos did what he did recently, it was paying its employees like McDonald's money, less than a post office worker.
Yeah.
So if Bezos just didn't have the kindness in his heart to make it livable, and he just did basically what Home Depot has done to its workers, drop their money down by $10 from what it used to be in 1988, then is that really progress? Is my point. And if we just, as black men, only go into the thought process of how can our skills serve, then I think we miss the bigger power move, which is how can we go into a market like cybersecurity when it was young and say, we're going to create our own lane, and we're going to be so involved with city council in this state that every time somebody tries to make a move in cyber, it has to involve us. I think that's the bigger power move, as opposed to your son has a skill, my daughter has a skill. Now let them fight for this Indian guy who's getting all this angel investor money, and he'll decide that he wants to give it to his cousin. I don't think that's the move, because if we go to a skill mindset only, this is my suggestion. The powers that be culturally are really about their family. They're not really caring about DE skill, dollar skill, my skill. At the end of the day, they rather take one of their family members, train them under you as a consultant, and then let you go and then keep their family member or the person within their cultural group. Gujarati and Urdu people do it all the time, and they're to India. They do it all the time. They will go uh, get somebody as a consultant. You will train one of their family members. They'll let you go after about 6 months, 4 months, and now they train. And now their family member will sit up there and work under them for until the lights go out. If we only go to a skill set, that's false. My last point is about the trucking. I said this to quite a few people. You cannot underwrite a driverless truck. Anything on the road in America has to be insured. You can do that in other countries that don't have that, and maybe they got open roads and dirt roads. But as long as somebody is able to file a claim, you can't have a driverless truck. It's ridiculous. And I just spoke to a couple of people who own trucking franchises just to double check and say, they say no way I would sit up here and take a load and have to insure that load. No, I'm not going to do that. So I think that's the biggest thing to tackle before somebody says, yeah, we're guaranteed to have driverless trucks. Nobody's going to underwrite it. But that's just my thought.
Well, we covered it. We had a whole hangout talking about this, about autonomous vehicles and micro transportation, medium transportation, and insurance companies are already working on restructuring their whole entire dockets to accommodate autonomous vehicles going forward. This was only a month or so ago we had this hangout, so we know that this is coming, and we know that it's
Can
happening.
you name
We
one
know that,
company?
I
Can you
believe
name
Liberty
one?
Mutual is like, I believe
Okay.
Liberty Mutual is the first one.
Okay.
But there are several others. I think Progressive and then a couple others like Amica, not Amica, Progressive and I forget the other one. I'll have to pull up the hangout to see
Is Progressive Warren
other
Buffett?
insurance companies.
Is
Well,
Progressive
I don't know
Warren?
if he's Warren Buffett.
Well, Progressive doesn't do commercials, so I know that's kind of sideways. But nevertheless, just email me the link, because I would love to hear that. Because it's just I just the only reason I mention it, Mike, is sometimes, and I've argued with BGS on this. Sometimes people say stuff, and there's a lot of elements that go into that. Like when people say, "Oh, it's all these advances in medical and tech." No, it's not. No, it's not. You maybe have robotics, and that might be one surgery department within 5 hospitals. That's not an advancement. That's one section. So, but I could be wrong. So just let me know. I only mentioned it to throw another element that I deal with on the daily basis, which is insurance and tech. So I just threw that in.
No, absolutely. My perspective on the IT piece is that especially for cybersecurity is not so much of a skill, but it's more of an art form. Um, it takes a very different approach to the function of business, because that's what it is. Cybersecurity is more of a function of the business, and it's definitely an art form that goes with it. So that's why it's so hard to fulfill those roles. Not really teachable.
True, very
Um,
true.
the other aspect is that when I talk about emerging tech, I'm saying we have to be on the forefront of it and not trying to play catch up with it. And part of the reason that we're constantly playing catch up because we're not actually keeping abreast with what's going on. We're always the Johnny come latelys. If we don't want to get involved until it's already on and popping, and by that time it's already too late. And that's why I kind of beat the war drums about blockchain and what do you call that? Cloud computing and artificial intelligence and machine learning and deep learning and autonomous vehicles because all of these pieces go together over the next 10 years. We covered, we had a hangout on Monday, facing technology. Toyota's all in with NVIDIA on artificial intelligence chips. NVIDIA just released, just the other day, a developer board for artificial intelligence that's only $100. You can't beat that. If you had to go out there and a few months ago, it was over $1,000, maybe even $2,000. So what I'm saying here is once we get ahead of the curve, then we can actually dominate it and kind of push everybody else out. And then we can get those government contracts, and then we can actually muscle everybody out and be that digital Halliburton that is much necessary for multinational development, business development.
I get you. The only thing I said is like I just use the Greek approach, which is solidify the access to the skill set as opposed to solidify the skill set because the skill set can be the problem with us as black people, especially the men. I did a video where I said more black men need to be managers first. You need to go be a darn assistant manager somewhere so you can know how to move money, people, and remix somebody and remix the white man system so that you could become valuable anywhere. I got so much pushback where dudes was like, "No, we want to work with our hands." You see what I'm saying? So that's a cultural thing where some dudes have just been indoctrinated with, "I want to pick up a box for the rest of my life." So I totally agree with you, Mike. It's just that, again, I'm looking at the cultural shift that has to happen to get them to see what you wish for them to see. And I just look at the easier route is, hey, go build a cyber union, and every time somebody get hired, here, brother, join the union. You know what I'm saying?
Or
But
even I'm thinking there's a lot of feedback coming for you, Mr. Research. I'm thinking 100 years ahead. I'm thinking about a space union, right? So we're talking about 1 in every 3 startups is going to be a space startup. We have a hangout tomorrow that's going to be focusing on, mini satellite, nano satellite development and the programming aspect behind it. So that's something that people who are listening to this, you might want to tune in tomorrow for that because this is where we're going right now. We're talking about the next by 2050, 2065. This is where we need to be dominating in and actually closing up that area because we've covered so many articles since we started doing these hangouts where just about every other group is pretty much solidifying themselves in these areas. Russia's President Vladimir Putin has talked about investing billions of dollars into their millennials for AI development to compete for AI. China is very dominant. They're in the top 5 of AI development. I believe they're probably just ahead of the United States. The United States is probably like number 3. We covered an article last week or 2 weeks ago. Africa is ramping up on artificial intelligence. New enclaves are popping up all over Africa. At least 800, not 800, a couple of hundred of enclaves are popping up for AI development in Africa. We're not even having these conversations here in the United States. You go through YouTube and you can see people's hangouts. They're talking about everything other than the 4th industrial revolution that's coming. And unfortunately, a lot of these guys are going to be left behind. A lot of black people are going to get left behind because they just did not do their due diligence to cover their bases in this area. And once in the fourth industrial revolution is so important because this is forcing everybody to go back into their own little corner. So now those other guys that don't look like you are not going to share their opportunities with you. They're unionizing in their own respect. So I agree with you, Mr. Research, in that regard that there must be some form of union established for cyber and other forms of emerging tech. But the problem is it's hard to get people on YouTube to understand that, or at least Black YouTube, that this is happening in your face, and there's nothing that you're not doing anything about it.
Well, if
You know, you get 800 people on the Hangout. You know, 800 people on a Hangout is a workforce. You know, my headquarters has 300 people, and it's a multi-billion-dollar corporation. Well, how is it that people can sit on that Hangout for 3, 4, 5 hours, 6, 7, 800 people in there, and they're not talking about anything, any of this stuff?
Because picking up a box is sexy.
A mentality. We got a mentality.
Say that again, Mr. Research.
I said because picking up a box is sexy.
We have a mentality that
Jody from Baby Boy.
Yeah, Jody from Baby Boy.
Can you guys hear me or no?
Yeah, go for it, D.
Yes, sir, we can hear you.
Oh, okay. Look, we've got a lazy mentality. Is that we're gonna vote for somebody, and this person is gonna give us what we want. This person is gonna give us a school that's gonna teach us this and teach us that. The children are not the men, so the men can't say my child is going to do this. The children belong to the women, and the women is using the children. They're not giving the children what they need, especially the male. And you have in this circumstances, we have to fight for everything that you're going to have. And the males in the past generation is not equipped for this. When I say past generation, up to about 35 years old, 90% of them are not equipped to fight and survive in the environment that's coming. Even today, they're not surviving very well. So in order to get that union, we're gonna have to change our whole outlook on things. The older generation of men gonna have to force the younger generation to to put them to a real change, a mental change that gonna force them to look and see that, hey, in a few years we're not gonna survive unless we have what this technological knowledge and the ability to function in that society. The union that you're talking about, they have never operated in that union. They have never been taught anything about that. It is like I gotta have my car, my Mercedes Benz, not build one, buy one. And if I can afford to buy one, I've got money in my pocket, and that's I can show off my money. That's what we do. That's what we do.
Yeah, they're part of the at will generation. It's at will. So we could let you go at will. We only need your labor at will.
Yeah, I mean, people change when they have to. Okay, when the environment changes, people respond. They in order to survive, we adapt. That's why I kind of grizzle every time I hear people in the manosphere say men press their will on the environment. No, you don't. You learn the environment and you use your brain and you learn to adapt to it. You don't. The environment, macro. When we talk on the macro level, environment it changes on its own. You're gonna adapt to it or you're gonna die. It's just that real, and we will adapt and we will survive.
Oh, our world.
Well, that's what Dr. Claude Anderson. That's what Dr. Claude Anderson was saying 2 weeks ago on Dr. Boyce Watkins' interview. That if Black people don't figure this out by 2053, you're finished. And
it's over.
I've been saying this on the Brain Trust before, that we have between 2020 and 2050 to figure this out. And if you don't, there is no black community after that. It's all
Whoa,
said
whoa,
and
whoa,
done
whoa.
because it,
2050.
$20.50.
You don't have to
How about
2050.
2030?
You don't have to
no,
2050
yeah,
because we right now
yeah.
we're in that bubble where
Hmm.
you can be inside a balloon, and when it
Hmm.
starts out, you feel the pressure, and after a while, you don't feel the pressure anymore. And then it gets to a point where you feel comfortable inside there until it busts, and you can't tell the point where it's like when it's 75 to 100% full, and when it gets to that 120% when it's about to bust. And that's the way technology goes. When technology it comes in slowly, and then it revs up until you're not paying attention when it's speeding up because you're still focusing on you're still thinking that it's going to move slow enough for you. While it starts speeding up, and you get left behind. So by 2035, we're going to be in trouble. It's not 2055 at all. This is going to be
Oh
probably
yeah.
20 years at best.
Well, 2050 is being gracious, right? I mean, 2035 is a very aggressive target, but what I'm saying, 2050 is being gracious for the zennials of this generation. But judging by the way, the way they're behaving on YouTube and other forms of social media, I don't think they're ready at all. You can only make so many YouTube videos and so many super chats, to pay your bills. It's going to get to a point where um, you can't drive a car in the city anymore. I can almost guarantee you in
Right.
about 10 or 15 years, New York is going to ban cars, and you won't have any other form of transportation other than be dependent on some kind of service. Um, I just don't see I don't see the skill set, or not the skill set. I don't see the education or the legacy being passed on to these people at all. It's just
Wait,
a shame
wait,
that
Mike.
they don't
Oh, I'm
they're not thinking long term. They're not thinking long term. Go
I,
ahead,
I,
Scout
I,
James.
I,
The trick
I,
in it is because you have that technology in your hand. They put that technology in hand in order to trick you into thinking that you are part of that technology and that you have real power in that technology. That cell phone in your hand can give you all the information you need. But guess what we use for? Taking photos, playing around with the
Yep.
emails and all that stuff. Instead of creating the technology, we are using the technology and not learning how to create it. And that's one of our biggest problems because we are thinking because we got the technology in our hands that we are doing something with it, and we're not.
I think
You,
the biggest threat to us right now. First, I'm gonna say that what we do in the next 3 years is going to set up the next 20. Okay, the biggest threat to not just black people, to everybody, is the financial Armageddon that we are involved in right now. It is already started. It started in November of 2018. It's already started. How we navigate this financial Armageddon will set up the next 20 years because we have people that are 50s in this 50s and 60s that think they're going to retire. 3 years from now, they're going to find out that they will never be able to retire. And that's going to put a lot of pressure on their children to take care of the parents. Okay, the children may not even be able to take care of themselves, and so as a generation, we may be spooked about investing, and it may take us, 20 years to recover from that. That generation may have to die before we get to this point to take the risk of investing or entrepreneurship or anything like that. So how we now, on the other hand, if we are astute and we learn about these markets and how to win, and I'm always talking about how to win, not just, hey, it's going to be bad, but this is how we can win. Somebody always wins. If we come out winners, then we can take that leap into a leadership position that you were talking about.
You
and,
guys,
and and let-
I don't know if anybody read the article I sent you guys out
DE,
today.
DE, DE, Mr. Research needs to go.
Oh,
let
Go
me
okay.
ahead, Mr. Research.
let me just get a quick piece.
Yep.
I must say I'm very proud of this slice of pie you guys created over here. because it is something different and it is something needed because as we all kind of said, the majority of these people, let alone the black sons, are deprived of good information. And good information is now over the heads of a lot of young people. We see more 22 and 28-year olds living up under a bridge simply because the family they grew up with is not the kind of family that can necessarily uh, give them a trampoline in life where they can bounce back or what have you. Um, the neighborhood where I'm at, uh, you barely have any more black people here anymore. In a place where it was mostly black homeowners. I'm not even talking about the apartment people, just homeowners.
You're in San
Because they're
Fran, right?
yeah, because
Oh,
their
it's just you and
children.
Kamala Harris there.
Because her children, because a lot of these people, their children were not put in a position to be able to take care of their legacy when they got old. And as I explained to my own father, uh, you sit up here and you have an incident like you're shitting on yourself, and and somebody from the county comes to do a health check on you, and now they got to report it. If you didn't have me, mom, and sister, they'd have carried you off, and your house would have been up for sale. It's just that easy to put people out of the game once they get old and get by themselves. They don't understand that if you don't have family structure, you can get put out the game. So as you guys said, and especially as Dollar Bill said, you got to learn these aspects of things. Or in Mike's case, you got to get in a new market. You got to do something, but sit and hope that everything works out, or do just enough. So I'm just proud of you guys for doing this religiously, because anybody that bumps into this stuff can't not say that they did not know. Go ahead, D.
I sent out an article, you guys, from Fox News. This guy is saying we we have to crash the economy, and that's what they're planning on doing. And it's not going to be 2050 or 20. It might be 2030 before they get it just right to let it go. And I'm giving I say 2030, but actually in my own mind it's 2025.
My objective is to try to hijack everybody's brain and turn you into technical traders so you can learn to turn this fear pouring off on television and see it as opportunity for victory. Somebody always wins. We do not have to be the perennial losers. Okay? I'm showing you every week what to focus on so we can win. Somebody always gets massively wealthy every time there's a downturn. It can be us.
Yeah, but the children, what I'm saying
Huh?
is our children, if they crash the economy in say 6, 7 years from now,
Okay, when you say
right?
crash the economy, what do you mean? Do you understand that
Well,
in crash the economy, somebody gets rich when you say crash the economy?
okay,
I'm saying that
right
we're
now,
gonna be we're gonna be the group that wins.
right now,
That's
the U.S. is over leveraged. Okay, so if what the government suppose the government come out tomorrow morning and say, okay, here's what we have to do because we can't afford to commit to social programs in the United States anymore. We're gonna give money to the army, to the armed forces. That's going to be guaranteed. And then everybody is going to fight for the other 20% that's left. Guess what's going to happen? A lot of people who uh, um, borrowing money from the government to go to school can't go to school. What are you going to do then? A lot of people who are depending on the government to pay for their Medicaid, Medicare, and all that kind of stuff, not going to get it. What are they going to do now? You know, we are not prepared for these things, and that's one of the biggest problems in the black community. we are lazy when it comes to financial information, when it comes to learning things for ourselves. What we don't what we don't learn in school, nobody guy want to hang out on the corner instead of picking up a computer. Even that cell phone in his hand, you can get financial information from. You know that, dog. Everybody here knows that, and we don't use it.
But DE, you have to take into consideration that there's a literacy issue. There are a lot of black people, especially black men, who cannot read.
This is an
So
American problem too. We got to keep in perspective now. We shouldn't put all this brunt on us. This is an American problem.
no,
Yeah, but
well,
it's disproportionately us. But this is an American problem.
We got to put it on us
well,
because even though it's an American problem, it could all America could be falling apart. Are you going to shoot yourself? Are we going to are we going to kill our children and commit suicide? No. A lot of us are going to say, you know what? I'm going to do something about it. So it is these foolish, you know, this frustrating me. This is the biggest thing that frustrates me every day when I see you know ignorant people doing things that they're not supposed to do, and then trying to make excuses for why they want to do this foolishness. And me, I can't deal with that.
Yeah, but we need we need to everybody that's listening with trying to understand that it's time to dig in and gear up for the fight. We got to gear up for the fight. You can't to the extent you can save somebody else, you try, but you don't risk put your own life kill yourself trying to save somebody else. Okay, so that's the most we can do is lead by example. Okay, and we can try to tell people, but we got to be leading by example. Is everybody going to make it? No, that's for every race. No, everybody's not going to make it.
Wait. Matter of fact,
this country did not educate its populace to make it for large scale success in the crisis. This country needed an underclass that produced it, and those of us that are out of the matrix, we got a fighting chance.
I tell you guys something funny, but I'm not going to name names. But so some brothers spoke with me behind the scenes. Mr. Research, man, you saying black YouTube is poison and blah blah blah, and it's some popular YouTubers, and they said what they said, and I said, but fellas, look, either we're trying to help people or we're trying to pay rent and make money, and I mean, the money that y'all make from YouTube is not equivalent to a $60,000 a year job. It's just not. Most people with million subscribers ain't even doing well. Serious biz. So this whole thing of it's a good show, talented content creators. It's a myth because as you guys just said, there's a bunch of dudes that can't read. There's a bunch of dudes can't pay for their own apartment. There's a bunch of dudes. I mean, you go to your average McDonald's or Jack in the Box, you used to see young brothers working. You barely see any young black dudes anymore. There is an epidemic going on. So between the housing not being owned by a lot of black people, between the young black homelessness, living in tents, and you don't see a lot of them in basic fast food and retail. This next generation needs more than why won't the white woman date me, or why won't the black woman leave me alone, or I mean 400 videos about that. It's just it's not helping our people. So I had some people try to check me behind some of the things I said, and I said, yeah, I'm just like, you guys got to do what y'all feel is right, but I don't care about the money because I make money outside of YouTube. So I see why it's important for y'all, but I don't know, man.
Well, everybody.
Well, Mr. Research, we try to, Mr. Research, we try to provide solutions as much as possible. I think every hangout we provided a solution, and the reason why we read the articles, the reason why we have to read them is because some people just won't read them at all because Either they're too lazy, or it's a matter of literacy.
Exactly. A lot of people will not come here because they'll say it's boring. I heard that myself from people. Why wouldn't you take a class in business? Because it's boring. Once you read a newspaper, it's boring.
Hunger is boring too. I mean,
Yeah,
people do we do what we must. That's just what it is, you know. It's like when we were kids, and I don't know if y'all ever had one. I got excuse my French, had one of midnight ass whoopings. I had the kind of parents that were they would tell you what to do. They come home and wouldn't be done, and you think, oh, you got away. Ah, shit, they would let me go to sleep with my ass in the middle of the night. Okay, you
I don't know
remember
about
the
that
next
though.
time.
exactly, bro.
You
You
remember
get
the next,
sleep.
and you
You,
have what we call a moment of clarity.
yep.
Oh, you mean you want me to dump this by 4 o'clock when you get home? Oh, I see.
Yeah, bro. You be comfortably asleep in the bed, and somebody lift you out the bed and walk you up to the table with a whip in their hand. You remember what I told you this evening? First whip. Why didn't you do it? That's it.
Wait,
Yeah,
wait. And what's so funny is you in shock. You like,
right, right. But then your memory comes back in a storm. You remember it all so clearly.
Hey, Scarlett Chang, you tried to get in earlier. Give you the floor for
Yeah, hey, can you guys hear me? Can you guys
Go
hear me?
for it.
Chinese ambassador is speaking.
Go for it.
The
Yeah,
Chinese
yeah,
Yeah,
yeah.
ambassador is speaking.
yeah. Hey, Mike. I think what I was saying. Sorry, to interrupt the flow. So earlier, what I was trying to say, Mike, you mentioned about how by 2050, right? For example, New York City, you couldn't even drive a car, and New York's passed this law. But I think in that case, it's not so much an inevitability of economic progress. It's more so the decline of liberal democracy in that case, because no government should force no government should force the citizen to adopt a certain lifestyle. It's one thing, like for example, in the case of a lot that lost their job, because that's in private employer, they can make the decision to do whatever hell want to do with their capital. But it's a completely different story when you have a representative government that legislate that is citizens' lifestyle. So if that was the case, then I won't consider that as economic inevitability, like I say, but more so is a form of is a form of, like I say, a form of economic is a form of more of a form of economic fascism at that point. So yeah, I
but
just want to respond to that because I like for
scholar,
example. Oh, go
scholar,
ahead.
scholar.
Yes, go
Quick
ahead.
thing though, you do realize New York was built as a train town, and they've kind of migrated to a car town. So that may culturally play into that.
Yeah, but I completely agree with you guys. Like I said, I completely agree with you guys. But the problem is, I just don't believe that the New York government being well, I have a lot of grievances against New York. New York government always they always pride itself being this multicultural, liberal city that embrace diversity, yeah, or embrace or form of alternative lifestyle wherever. But then at the same time, they are one of the most authoritarian, oppressive city out there. They legislate everything. I mean, when the Bloomberg right now didn't he was trying to legislate how many calories you can take in your body and so forth. So I mean,
The
it's not.
soda, yeah.
Yeah, soda. Yeah. So the well, and that and also I think for the wasn't he trying to ban the I forgot, what's it, some kind of something to do with a hamburger, right? Wasn't some kind of some kind of he trying to make it illegal to have a particular. See, that's what I'm saying. A benevolent fascism is still fascism, nevertheless. It's
But
like I said. Go ahead, go ahead.
it's got to happen because you got China, who has
Yes,
an authoritarian government.
yes.
Is running rings around the United States right now at the time. I mean, I'm not saying it's stronger, but within the past 30 years, China has done more as far as growing. and getting the technology to the market than the United States. You got Russia who's doing the same thing, and these people here are looking and saying, "Hey, we're liberal. We're too liberal to." And you see what happens now. Just like China is putting up cameras everywhere,
Yeah.
the United States put cameras everywhere. They have to because they no longer have to put. Before you used to provide this education, free education, these things that people didn't have to pay too much for out of their pocket, directly out of pocket, which came out of taxes, but so you used to give you an incentive to do these things, but now they can't afford. The government can't pay for that incentive anymore, so they have to force you to do it.
Yeah.
That's what's going to happen. That's society.
Well, that's what I'm saying. See, that's what my biggest concern right now is, if we look at so-called quote unquote, those all these BRIC country, Russia and China, and so forth. If America trying to imitate its economic model in terms of being successful, then you might as well toss out the entire constitution. You might as well toss out all the tradition that supposedly will make America. So if you're gonna imitate that, if you're gonna adopt a um, full authoritarian approach, whether it be economic policy or financial policy, because remember, America is already on its path to be authoritarian. For example, ever since with the establishment of Federal Reserve, because the Federal Reserve, let's be honest, is a form of basically is a oligarch, it's a private bank. So I mean, right now you're gonna add on to all these other city, municipality, those local government to try to enforce a fascism regime. That's what makes it even worse, because your local government, like for example, in the case of New York, the city, okay, well, whatever the federal government does, okay, it's gonna be authoritarian. But if the city is supposed to be the local level, they're supposed to have a check. They're supposed to check that federal overreach at the state level first, then at the city level, then at the municipal level. That's how the whole federalism is supposed to work. Now, if New York, like New York, or any city, assume that, oh wow, we believe that for the quote unquote greater goods of this economic necessity, we're gonna force everybody else to coerce everybody else at the gunpoint at that point. Then what do you call that? Go ahead.
I didn't mean to interrupt you. Scholar Chain, what did you major in again?
Engineering.
Okay.
Well, my undergrad right now is engineering, but my undergrad was math and physics.
Well, I totally agree with you, Scholar. It's just that the unfortunate thing is,
yeah,
whether people agree with this current presidency or not.
Mm-hmm.
What I found out as a conservative, I already knew,
Mm-hmm.
but I found out that people are willing to go against their principles, to
Yeah.
go against what they claim that they are down for,
Mm-hmm.
in an effort to give themselves a golden parachute. And and even though I share your concerns, not only about your city but my city out here,
yeah,
it's people are willing to do the golden parachute. Now, I will say this though: when we have something that we cannot avoid, whether it be a war or another recession or what have you, the thing I think is going to be really weird is to see who's really down for America. Is everybody going to use their passports and bounce? Or are we going to convince somebody's son or daughter to get out there with a rifle and fight? Because clearly most of us are not.
Yeah.
And there's no more Pearl Harbor, I'm American born, I'm down for America anymore. Because like I said, most of those people are living up under a bridge now.
Yeah.
Hey, let me get out of here, you guys. I got a chick coming over, so I got to get ready for the chick.
Hey, see you later.
Mr. Research, when you later cue back to the end of this where you left, so you can see the war chart that I'm gonna put up.
Okay.
To make that point about the war.
Okay, sound good.
Right.
All right,
Thanks.
fellas.
Thanks.
All right, see you guys.
All right, have a good one, brother. Go ahead, Dollar. Post your chart.
Okay. You guys, let me get it. Uh, okay. This is not gonna be long at all. And I'm also putting the video from the first one on my page, on my channel, where it's very long, explains Elliott wave theory. It talks about some of what I'm putting up right now. Okay. So what? World War One was what? Now, unfortunately, this is bar charts. They don't go all the way back. But World War One, what was 1914? Something like 1914, 1918, something like that.
You said World War One.
1911 to 1911 to 1940.
No, no,
I'm sorry,
no.
19,
14 to 18.
Right.
14. I'm sorry, yeah, 14. I'm sorry,
Yeah.
14 to 18.
So
Yeah.
this as far as I can go back in bar charts. But in that video, I go back more because I was using another free chart that I can't access now because Apple won't, some flash media crap with Adobe, and Apple don't play fair with Adobe, so I can't go to freestockcharts.com. Anyway, so we see here the fourth quarter of 2014. You see it there, and this is 1919. So this is World War One, and we know that a trend is a higher low and a higher high, and the high was here. So we got from 1914 to 1919, the Dow Jones trended up during World War One. So get that out of your mind. What appears to be logic to you, that war makes the stock market go down. It does not. The stock market is more powerful. It's a powerful force. Money is a powerful force. Forget all this stuff all this talk we hear in the manosphere that money don't have nothing to do with alpha. Dollar Will says that's bullshit. Money always has something to do with power, and power always got something to do with alpha. Fuck what you heard. Okay, there you go. World War II was what, 1937 or 8, somewhere in there?
39 to 45.
Yeah, well, yeah,
39,
30.
45. Okay, first I want to show you this high here was 1929. This is the quote unquote Great Depression decline crash. Okay, from 29, the third quarter of 1929 was the high, and the low was 1932 in the third quarter. So we're talking about 3 years. This current downtrend we're in, I wouldn't expect it to last. I would expect it to last about the same, about 3 years. But the point I want to make is that we already had the decline, and we started the trend higher, and we have higher lows, higher highs, and somewhere right in here, the war broke out. But the trend had already resumed. The downturn had already happened. World War II broke out, and the trend just kept moving along. You don't see anything in this chart that says, oh, what the hell is going on? It looks quite orderly, just like everything that happened before. That's why I'm always of the opinion that the Fed is responding to the markets. They're responding to the price action. They don't create it. Man responds to the environment. We don't create it, in terms of on the macro level. And when you're talking about the Dow, over 100 years of chart action, and you're talking about the dollar, it's pricing major commodities in the globe. That's some macro stuff, okay? That you can't change those price directions just because Trump did a tweet, okay? I'm not buying it. That's why I think it's dangerous for the media to promote this idea that every little thing that the government does or the president says on the third Tuesday of the month when it's raining, that made the market go down, 200 points. The market was going down because of past events that were already in progress. Okay, but basically, in the long view, you see my explanation for what happened to why we're poor, why we are in the station, We are, because we miss this run. Our culture did not reinforce that we are in America, and America is capitalistic, and we cannot be against capitalism and flourish and be in America. And the very basic way for Americans to participate in capitalism is to try trade or invest in the stock market. So this is it. So that's all I wanted to show. Now, if you want to look at 20, what was 9/11 was what? Um, what was
9/11 was 2000, 2001.
two? I'm trying to get to that, and that was September of 2001. Because I've heard people say crap like 9/11 made the stock market go down. Okay, the high in the stock market was in the first quarter of 2000. The market was already trending down as part of an orderly technical retrace from being overbought to oversold, and then life happened, and the market just continued on as it normally does. Okay, so now you know why Dollar Will does not buy this crap that events cause prices to move. you know, we're talking about dominoes that have been established far back in history that produce events today, and all trends correct or come to an end, however you look at it. Very orderly downturn. All it did, this was the 2007 decline to 2009. This was the prior low. It made a new low, took out this low, and continued higher. Now, what's different about this one, where we are now, is that, and it gets into some Elliott wave theory that you got to watch my tape to see that the trend we're in, and by my wave count, from this point in 1932 to November of 2018, I'm, by my Elliott wave count, all of that is Elliott wave 3. That whole thing from 1932 to November of 2018 was Elliott wave 3. And we have a huge correction of that wave. And that wave is going to be, that correction is going to be substantial. I believe just as this decline took out this prior low, I am of the opinion that the decline we're in is going to take out this low. We'll see. I put it on record here in the Brain Trust. We'll see what happens. And it may only take, hopefully, 3 years to not much. Hopefully, it doesn't take much longer. And if we can survive this financial devastation, wiping out a decade of whatever accumulation, I guess I can't use the word wealth, whatever prosperity or relative wealth we've achieved in the last decade, if we can come out on the winning end of this, we could change our position globally, our global economic position, our global power position. So that's why I think we shouldn't get so farsighted about what we need to change. The biggest threat to us is this financial destruction, and it's happening now. Now it's happening now.
Okay.
So,
Well,
I want to ask you a question in regards to what you said.
go ahead, Mike.
no, my only point earlier when I was talking with Mr. Research about war does drive the the price of oil. I was referring back to 1973, the Yom Kippur War with Israel and Syria, when Saudi Arabia basically threatened anybody else who's allied with Israel that they will have an oil embargo, and that oil embargo actually caused a spike in gas prices in 1973, 1974. So you had gas prices going up to $10 a gallon. That was, we haven't seen anything like that before.
Well, I guess I'm not. I guess I'm just offering a technical. It's just like I said before. This is one of those fundamental versus technical things that can't really be solved. And I just want people to understand that there's up to more than at least two ways of looking at it. To say that the some act by man in that moment caused the price to spike. That's saying if nothing had happened, the price wouldn't have spiked. Well, the technical trend, the spikes don't look like spikes when you're looking at the charts from a technical perspective using Fibonacci extensions and things like that. All those moves become, I'm I'm trying not. Well, I would say, yeah. I'm trying not to say predictable. I mean, it's a price level we know we're going to reach. Okay, using Fibonacci extensions, we know we're going to reach that level. We don't know how soon we're going to reach that level, but we know we're headed that way. So viewed like, if you're a technical trader and you're expecting a price target to hit a certain level, and the price actually does it, well, it's no surprise to us. That's what we expected it to do. But the fundamental trader will say, well, it did it because of this event somebody did. I'm like, no, it was going to get there no matter if that event hadn't happened.
Dara, I understand what you're saying, but when I look at this chart, I look at it as a history that's not written in words. It doesn't explain the things that, like Mike said, it doesn't explain the external forces that helped to create that chart. That chart is just showing me what happened in other than words. So like somebody have to write down every event that go along with that chart in order for people to understand it.
Well,
And
I think the disconnect is people. It's like you're answering the question with a question. It's like you're assuming that something in the moment has to be driving it. If one country makes a trade agreement with another country to trade one commodity for another over a 50-year trend, and then we have demographics that show X number of human beings were born in this part of the world, let's say Africa, and we know they're going to need food to eat. That's going to create a demand for that commodity, and that demographic fact alone is going to cause price appreciation. You don't need no other thing. You got a trade agreement between countries, and your geopolitics is around those trade agreements, and that's what you call your quote interest that you fight wars over. And so you got a demand for a commodity, and you got consumption of that commodity, and you have an agreement that stretches multiple generations. You got major corporations owned by the richest 1% that are set up in America, set up private businesses to satisfy the government contracts. So their money and profit is guaranteed. So now you have stock price appreciation of the corporations that have aligned themselves to fulfill the trade agreements of the company. So now you have stock market appreciation. Those big companies subcontract the smaller companies. They hire you. You need a desk, a computer. You buy cars, homes, clothes for your kids. You make babies when you feel wealthy. You see how the dominoes affect fall? It's all you need is a long trade agreement. All you need is a surplus of a commodity that's in demand that you have the military to protect. And then you make a trade agreement. That's it. You don't need no daily stimulus or impetus for a price to go up. But why do you need more of an explanation than that? That's my question, DE.
oh, me, I like you. There's the common man on the street who wants to feel like something good is happening. Like if you told the common man on the street that China is going to surpass the United States, this depression is going to set in. Now, if you tell him that we are fighting against China, he's going to feel good in himself because he feels that he can win.
I would say I'll answer it this way: to be successful in a economically stratified country or a world or a power stratified world, to win, you can't be the common man. To win, And to not be born into wealth, you have to be the uncommon man. So we have to make a choice. What do you want to be? If you want to be on the winning side, you're going to have to be uncommon. So that means you're going to have to dig a little deeper for some information, and you're going to have to come to some different conclusions. You know, because if you think like everybody else, you're going to react like everybody else. But when you say you want to win, you're talking about you want an uncommon result. So you're going to have an uncommon process to achieve that uncommon result. So my question to everybody listening is, what do you want to be? You want to be a common man with a common result, or you want to be an uncommon man with uncommon result? And if you want to be an uncommon man with uncommon result, you're going to have to learn what the uncommon men know. And I tell you, they do not think like we think. They do not think like the common man. That uncommon man is the one who owns the media and the newspapers that teach you what to think. But he doesn't do what you do or what we're taught to do. And this is what I'm telling you this as someone who has worked in media since 16 years old. So that's about 30 years. And you listen to how cynical I sound, and I'm telling you this from my nose-to-nose view with the image makers, with my hands on the control helping to make some of the images. What you see is not always what it is. You got to look a little deeper and stuff. That's why I'm challenging people. When I say something that sounds crazy, write it down and look at the data. And then decide, do you have the courage to go against the common opinion when you see the data contradicts that, what people commonly think. Blue pill, red pill. There you go.
Yeah, I want to make sure we get everybody's closing thoughts, but I also want
That's my closing thought.
to give Preem. Yeah, I also want to give Preem, if he's still in the chat, at least 5 minutes to get on the panel, and give his closing thoughts as well. Scholar Chang, you have any closing thoughts? I know. You have any closing thoughts?
I just want to say this: if my explanation of what makes prices move, if it makes sense or don't make sense to you, either way, write it in the comments section underneath the video. I want to hear what you think.
Well, it makes sense if you're looking at it from a perspective of investor over a long period of time, or even a short period of time. But as a person, say I'm average guy who goes to work every day. I might be making $100,000, but when somebody says to me, the president's going to China and he's going to make this trade deal, and the market goes up, and the news says, well, the president's going to, bolster the economy with this trade deal that he's doing with China, then you look at that and says, hey, my president is doing good, so he's going to feel good. Whereas I'm going to look at all the charts and I'm going to say to myself, look, like you said, this is normal. We make trade deals, and that affects what happens, and that affects the market. I agree with you that way, but not everybody can see it that way.
All right. So since Preem is not going to come on to the panel, we're going to close it out for tonight. Thank you all for joining us, and we will be back tomorrow with a Black Tech Talk for Cube-based satellites, and Raspberry Pis and Arduinos. So make sure you stay tuned for that. That's going to be good.